of 2022. So certainly has to do a little bit with the way that people are thinking about the path of the Federal Reserve.
Yeah, exactly. So it's kind of like tick-tock, everybody, because that is the sound of the Federal Reserve basically resetting the clock when it comes to what they want to do with interest rate cuts, putting them off longer, as we know. Chicago Fed Bank President Austin Goolsbee among the latest to weigh in today, saying the U.S. Central Bank, Tim, needs some more time.
Writing about all of this in a week two when we heard from Fed Chair Jay Powell, who confirmed we are indeed, yes, higher for longer. On rates is Bloomberg News Federal Reserve and economics reporter Katerina Saraiva in our Houston bureau. Katerina, a great piece that really ties together kind of everything that we heard this week with Powell, the moves on rates. We know the drill, the Fed data dependent, and yet Fed Chair Jay Powell cementing the message this week that led to the reset of the clock cutting rates, as you write. Why do you think there was a significant shift this week when we heard from a lot of Fed speakers in recent weeks that, yes, that data has indeed come in a little hotter than we like?
Yeah, well, I think, you know, as they say, it ain't over till the fat lady sings. I think in this case, you know, people are really looking for that guidance from the top. And I think especially getting it from the chair is a clear indication that this is kind of, you know, we're now seeing a shift. And it's kind of has broad support. You know, we've, as you mentioned, heard it from various Fed officials, but now also from the chair. And, you know, importantly, we also heard it from the vice chair earlier this week. And you've heard similar sentiments from John Williams, the president of the New York Fed. So that's kind of your FOMC troika, as they like to call it. So, you know, the leadership is saying it, the others are saying it. So now we can be sure that this is kind of the path forward.
It's like in a household, you know, depending upon parents, like one is sometimes more strict. So it's like, you know, well, mom said this or dad said this. Like it just holds different weight. We know that. I'm not saying one sucks to the other.
Who's Jay Powell in this case?
Jay Powell is just, I don't know, he's both, I guess, right? But having said that, it was significant to have him kind of finally get on board with this idea that, yeah, maybe we are going to stay higher for longer. Having said that, I do feel like there's still a little bit of a drumbeat among Fed officials, Katerina, that we're still going to get a rate cut this year. And I feel like market folks that we talk to say, yeah, probably after the elections is kind of what we're thinking. Has a rate cut by the Fed and Fed officials been ruled out completely?
No, I don't think so at all. I think they very much would like to cut rates this year. And they're also concerned about, you know, what will start to happen on the labor market side of things if they keep rates, you know, too high or high for a long time. So they're being very cautious. I think they would like to cut rates. I think you see, you know, this reaction we're seeing in markets is maybe kind of a bit more extreme than where Fed officials are, right? I think you're seeing now just odds of two rate cuts this year, people pushing it out farther and farther. Some banks now saying that, you know, we might not get any rate cuts at all. But I think for the Fed, you know, the latest forecast we have from them is for 3 cuts. That, you know, we'll have to see in June whether that holds up. But I think they want to see a cut.
A couple of things that struck me in your story, and this one in particular, because we're starting to hear from people saying, and we have actually for a while, no rate cuts this year, and maybe we get a rate increase. You write in the story, Fed officials are increasingly voicing concern high borrowing costs may not be doing enough work to rein in demand, increasing anxiety among investors and analysts that the central bank may need to actually raise interest rates further. It's interesting how the narrative has changed, I feel like, Katerina, in such a short period of time. You know, what guidance at all or commentary have we gotten really that we can kind of hang our hat on when it comes to Fed officials about a rate increase?
So first of all, it's not that many Fed officials that have kind of opened the door to this, but a few of them have maintained throughout this whole process, you know, from when they started holding rates in July, that another rate increase is not off the table. I mean, you've even heard Powell say this. So I think they want to keep options open. They've seen what can happen when they tie themselves down too much to one policy course, and it's not good. So they want to keep options open, but it's still a very kind of fringe idea, if you want to call it that. It's kind of the last option for them. So I think it's still pretty out there in terms of the chances for that, but they're keeping the door open.
So, okay, keeping the door open, it's fringe, it's sort of an out there option, the way that you described the idea of potentially raising rates this year further. I wonder, though, what data you might have to see for you to start saying that idea is no longer fringe, or we hear from more Fed officials that, okay, we might need to open the door a little wider on this.
Yeah, I mean, I think the inflation data is going to be, really hotly watched from now on. And I mean, it has been already. But I think if we continue to see prints that are disappointing, that are just kind of flatlining or even going up from where we are right now, that's going to really increase concern of that. And then I think other demand activity, right? If you see the easing that we saw in the first few months of this year in financial markets, so if you see, the stock market going up again, maybe treasury yields falling a bit from these higher levels now, that could cause concern. And then some of this consumer data, right, like the labor market strength, if that just continues unadulterated, if you see consumer spending and retail sales data that continue to come in really strong as it has the past month or so, all of that will kind of add to this picture of the economy isn't slowing as we would like, and it's going to take more action from us being the Fed, not me, but it's, that it would take more action from the Fed to really slow things down.
Well, Katerina, we had Matt Boesler on our program yesterday, and he pointed out in a great piece in Bloomberg Business Week about how increasingly we're starting to see a larger and larger portion of inflation data made up of rents going up, not necessarily across the country, but in certain hotspots around the United States. Given that the Fed's tools that it has are blunt instruments, how does it get that part in control when all it can do is, focus on this dual mandate?
Yeah, I mean, it's a really interesting question. And this is something that Chicago Fed President Austin Goolsbee has been talking about, how if you look at the kind of different big components of inflation, goods, services, and housing, the one that really hasn't slowed down much is housing inflation. And so that's concerning. But as Matt pointed out in his piece, that does have some kind of geographic differences, right? You're seeing slowdowns in the South and in the West, but not in the Northeast. So, I mean, I think for them, for the Fed, what that means is just keeping rates higher for longer or potentially raising rates to try to slow it down. I mean, it is a very blunt instrument. And I think that's why at the beginning of this tightening cycle, people were really concerned that we were going to have to see a recession because demand was just so strong. And in things like the housing market, where you have so many other forces at play, right? We have a huge supply issue in this country. So it's really kind of tough to move that needle when you just have the reality of not enough housing for the number of people we have in this country. So I think if we don't see more progress on that front, it is going to kind of bring back some of those questions about, are we really just going to have to break things a little bit or cause more pain to fully bring down inflation?
Well, and Katerina, as you guys point out, or you point out in your story, I mean, the idea that the things that folks are worried about is that it takes so little to kind of stimulate the economy right now. I think we're all shocked, as growth estimates being kicked higher here in the United States. We heard from the IMF about global growth, and we keep having folks on, especially in the investment universe, are saying like the U.S. is doing well compared to a lot of other markets, especially developed markets around the world, when you look at their economic outlook. So, better growth doesn't take much to stimulate. You got to be worried about sparking inflation again. And that's kind of where the Fed is. And I'm assuming at this point, they're going to want to see 2 to 3 to 4, trending lower when it comes to inflation before they're ready to really do something when it cut rates. So that's already, you're talking 3 or 4 months at least from now.
Yeah, I think that's right. And I think that's what we really aim to show in the piece, that the clock has been fully reset now. We've had 3 months, at least with the CPI, of disappointing reads. We're likely to get another kind of flat, maybe up print in the PCE next week. So it really now, the clock is reset. We need another probably 3 months or so of just, data that is where inflation is cooling and not just staying steady or rising.
So, Katerina, let's go back in time a little bit to November, December of this year, when we saw what was referred to, I guess, until yesterday or earlier this week as the first Powell pivot. Do you think that's something that maybe the Fed chair regrets, or perhaps wishes he wouldn't have done?
Yeah, I mean, I don't know. I think it's so difficult to, in hindsight, go back and say that, because the data were looking good. And I mean, to be fair to him, what he said at that point is that, the next policy move is likely a cut, which I think still seems to be the case.
Yeah.
And really, he was working with what he had at that point, right? So it's tough.
It's tough. It's going to be interesting. May 1st, that next FOMC meeting, so certainly a focal point for us. Katerina, thank you so much. Katerina Saraiva, Bloomberg News, Federal Reserve and economics reporter. Hey, now we want to get to something that we are focusing on, geopolitical, what's happening among lawmakers up at the U.S. Capitol. The U.S. House advancing a long-stalled $95 billion aid package for Ukraine, Israel, and Taiwan, a breakthrough signaling an end to an increasingly agonizing wait for Ukraine and U.S. allies in Europe. And I got to say, a lot of stuff continuing, obviously, to come out of the Middle East. A story that caught our attention is a column by Bloomberg Opinion international affairs columnist Mark Champion, in which he is someone who continues to look at the geopolitical for us from all its angles. But this column he poses, if only the West backed Ukraine as it did Israel. Mark joining us from London. Mark, only got a couple of minutes, but you look at the contrast between Western allies' response to Iran's missile attacks and to Russia's. You say it's time to call ourselves out over Ukraine. Explain that positioning.
Yeah, essentially, what happened is that there's nothing wrong with what the West did in Israel, in my view. I mean, they did the right thing. They, when Iran, showered missiles on Israel, they got involved in order to defend its airspace and to make sure that there wasn't the kind of catastrophic loss of civilian life that would lead to a regional war. So that's exactly what we should be doing. The issue is that, that was what we were doing in Ukraine, and it was understood that that was what it was about, to make sure that Russia didn't, succeed in its invasion in ways that would leave, triumphant Russian troops across the border from Romania, etc. There would be very significant costs to allowing that to happen. But that, more recently, since last October, really, the West has sort of dropped the ball, and primarily because, U.S. funding for the weapons, the interceptors that are there to stop missiles from landing on Ukrainian cities, it just dried up because Congress refused to release it. And now you have cities in Ukraine that are being hit routinely. Their infrastructure is being hit, their heating is being hit, their electricity power is getting hit, and people, residential apartment blocks are getting hit, and people are getting killed as a result. So the point I was making is that, we're doing the right thing. We did the right thing in Israel. We had done the right thing in Ukraine, and we need to get back to it.
We apologize, Mark. We're running out of time here, but we really recommend everybody check out your column and columns that you can find on the Bloomberg terminal. Mark Champion joining us from London. Hey, when we come back, we talk Netflix with an analyst who is looking for a 30% gain in the stock over the next 12 months. That as the stock drops the most in 2 years today, Tim. That story is coming up next. This is on a day where we're seeing, again, some volatility in the trade.
Yeah, the NASDAQ certainly taking it, the brunt of it today, down 1.7%. The S&P 500 down 0.7%. The Dow Jones Industrial Average up about 0.5 percentage point. Carol, in terms of what's dragging down the S&P 500, it's all big tech, supermicrocomputer, Netflix, NVIDIA, and more.
Netflix right now down 8.5%. Folks, you are listening and watching Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index right now at 49.79. Got to keep it tuned in to Bloomberg Television and Radio just to find out where we close. Will we end the day back above 5,000? Right now, we are looking at a loss in the S&P 500 index of 31 points, down 0.6%. Dow Industrials up 193 now, up 0.5%. The real damage, though, among tech stocks, the NASDAQ 100 index down 1.6%. The NASDAQ Composite Index also down by 1.6%. 10-year yield 4.61% with a 2-year that's now yielding 4.97%. Spot gold up $16 the ounce to $23.95. That is a gain of 0.7%. And West Texas Intermediate crude oil up 41 cents a barrel right now, 83.16, up 0.5%. Brent, the global benchmark at 87.42. Brent up by 0.4%. So again, we've got the 10-year 4.61%, that 2-year 4.97%. Among the many names out with earnings, American Express, the stock rallying now by 5.5%. American Express reported revenue that topped estimates in the first 3 months of the year as consumers continue to flock to the company's premium credit card offerings. AXP up now by 5.5%. Recapping stocks mixed, S&P down 31, a drop there of 0.6%. The S&P at 49.79. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, shares of Netflix, you know that. Charlie talking about it. We're all talking about it. They are dropping. They're down about 8.3%, the most in 2 years. Shares started tumbling last night. The trade continuing lower into today's trade, following a weak forecast for revenue at the company and a warning that the streaming giant will stop reporting subscriber numbers in 2025. You saw that as soon as it crossed last night. You're like, that's a big deal.
It's a really big deal. I mean, less data, that is not something that investors want. It's not something that analysts want. All of that really overshadowing an otherwise strong start to the year. Its best start to a year going all the way back to 2020, and a blockbuster gain in subscribers in the last period. But subscriber gains, Carol, the company said, will be lower this period.
All right, so let's get to the interview. He was a bear on Netflix for years until he wasn't. With us is Michael Pachter, Managing Director and Entertainment Analyst at Wedbush Securities. He's out there in Long Beach, California. Michael, let's just go to it. Down more than 8%, that sell-off, justified in your view?
It is. I mean, I think Tim said something that probably isn't right. As an analyst, I prefer no information. It actually allows it allows me to share my insights, and investors actually value them more.
Well said.
And the truth is, you know, this stock was valued for 20 years on subscriber growth. And that's all people cared about. You know, if you kind of remember, and I know you guys were in grade school, but the dot-com boom, all we cared about was the number of email accounts or the number of users. And that's true of Netflix from 1997 until effectively yesterday. And what the company is now doing is acknowledging that it's no longer a super high growth company, but it is remarkably profitable. And so, you know, we have to transition to looking at them as a low growth company with lots and lots of profit. And I think that what investors are missing today is that the spend on content is likely going to be steady state. There's, you know, if you're spending $17 billion a year on content at 270 million users, do you really need to spend 10% more at 300 million users? Like, no, they have plenty of content. So the leverage from even modest growth is going to be massive, and the cash flow number is going to get giant. So yes, I think it's worth $725. I think the sell-off is overdone, but people are disappointed because they've been trained to value these guys based on subscriber growth.
But Michael, it doesn't sound like you're that disappointed that you're not going to get those subscriber numbers anymore, because you're thinking that this company needs to be valued in a different way.
That's exactly right. And, you know, Harvard Business School wrote a case about my valuation of Netflix. And I've been saying this for 10 years. It wasn't sustainable as a high growth, low profit company. It had to transition to a low growth, immensely profitable company. They started to do that in 2022, and that's when we upgraded, May of 22. And, you know, I said it then, and I'm saying it now. They just had to complete the transition and acknowledge this is how we should look at them. We don't look at Facebook as a high growth user company. We look at it as a high growth profit company. We don't look at Google as, you know, adding users. We don't care at all. We just care that they find better ways to monetize. Netflix has done that. they found better ways to monetize. The two big things are the ad tier, which not only grows revenue through higher, ad revenue per thousand ads, I'm sorry, per thousand views, but also allows them to bring in lower income customers, and also allows them to retain people who are churning out. And then the second is password crackdown, no sharing. That means I'm going to pay more when my kids move out. I'm going to buy my kids $7.99 subscriptions rather than make them pay themselves at $15.49. So these two things add a lot of revenue, and that's where we should really start looking at. I mean, we should start thinking about Netflix as growing revenue. Who cares how many users they have?
Let me ask you something, and forgive me because I'm going to go in a tangent, but Tim knows I kind of do this. Apple, do you feel the same way about Apple, that maybe it's a lower growth company, but it still sells a whole heck of a lot of stuff?
Yeah, I mean, I don't cover Apple. My colleague Dan Ives does, but yes, you sell 500 million or 900 million phones a year. Do you really care as long as all those people use every app and they're paying in the App Store? Like, you don't care at all. So, the App Store revenue is the part that's really growing, and the warranty revenue, and all the service income from those guys and all the accessories. So if you have 900 million phones out there, they have more, you can sell 900 million AirPods.
Yeah.
So people start thinking about the basket size. So yes, Amazon, same thing. Do we know how many users Amazon has? We don't care. I mean, I personally went from 1 item a month to 3 items a day delivered from Amazon. And we all are doing that. So we all get it. We understand that Amazon just starts to replace all physical retail, and we don't care if there are more users. Same with Apple. We don't care if there are more users as long as those people buy more.
I love what you're saying. It's interesting, but it's like a total rethink about how we value these companies, or certainly how we report on these companies. Do we get to that point? Is the analyst investment community going to go there at some point?
Well, they're there on every one of the, the big top tech companies, except for Netflix and probably for Tesla and probably for NVIDIA. Every other company, Microsoft, like, nobody thinks Microsoft is growing users. They just think Microsoft is growing the way they monetize users. Nobody thinks Amazon is growing users, or Apple, or Google. So no, I think that every large tech company, every $250 billion company or bigger, we should start thinking about them as achieving steady state users, but figuring out how to grow basket size. And that's where Netflix is right now.
Okay, Michael, I want to talk about these different levers that Netflix has to use to increase revenue. I want to talk prices here. I mean, how much room does Netflix have, especially in markets where it's really fully penetrated, like the United States, to actually raise prices?
Well, I think that you're going to see streaming competition kind of drop by the wayside. Let's see what the new owners of Paramount choose to do. Sony's not going to be able to suffer through, big losses on Paramount Plus. And so I don't know yet. Disney is not going to take losses forever. They'll flail for a bit. But as Disney pulls ESPN onto a standalone streaming service, they're going to realize that's a huge mistake. Peacock is unsustainable. So truthfully, I'd say people will probably pay about $20 a month. We're the average user on Netflix consumes 65 hours a month of content. That's worth $20. I mean, that just doesn't turn out to be very expensive, 30 cents an hour. So I think 20 they can get to. I think on the ad tier, they could probably get to something like 6 ads per hour at $40 per thousand. And that means you're talking about $20 or so per month just in ad revenue. So I could see the average revenue going up. And this password sharing crackdown also is going to take that number above 20. So I think $20 per user is, at least in the US and Canada, is pretty realistic. Cut that in half probably for Europe, and then cut it in half again for rest of the world. So again, $20 here, $10 Europe, $5 rest of the world. But I think they're going to get there. I really do, in terms of ad.
You obviously like it. You, as we mentioned, your 12-month price target of $7.25, 30% upside roughly from where we are. What are the problems? What are the risks, though, with the Netflix story? I mean, nothing's ever perfect, except, of course, my co-host. But other than that,
their arrogance is probably their biggest adversary. They don't seem to think that they need the analyst community. So probably half the people who cover the stock could not explain to you what I just explained. They don't have analyst days. You know, they sent out something for the upfront meetings, and they told my team we can send one person. We said, can we send me and my co-analyst? And they said, nope, only one. They're jerks. They don't seem to have any interest in hearing external views about anything they're doing. So their game strategy is just idiotic. And again, a very large shareholder of Netflix told them they should talk to me about games. I was copied on the email introduction, and they never replied. They just don't care. So they think they know everything. You can watch their earnings call. Look at Greg Peters and Ted Sarandos. They are the two smartest people ever born. Like, watch the earnings interview. You can tell they are. They're the smartest people ever born. So they don't need to hear from other people. That's their biggest problem, I think.
Yeah, and some context too. I mean, you have been covering gaming for years too, so perhaps that's why some people recommend that you should talk to those folks about games. I'm wondering if that changes just in the last 30 seconds that we have with you, Michael. Does that change at all now that increasingly you argue they're viewed as a value stock? Will they start to open up a little more?
I don't think so. I think your first point that they're becoming more opaque. This has been their formula for success. They have consistently lowered the number of data points that they provide to investors for the last 15 years. This is their DNA. So no, I don't think so.
All right. So appreciate your time today. Michael, have a great weekend. Michael Pachter, Managing Director and Entertainment Analyst at Wedbush Securities, joining us from Long Beach, California. I'm looking at shares of Netflix. Tim, down about 9% here. So pretty much hovering near their lows of the session, down the most in about 2 years. So certainly one of the laggards we're seeing in the session.
Well, speaking of laggards, we're also seeing the NASDAQ composite move lower by 1.8%. 0.8% is how far we're seeing the S&P 500 move down, and the Dow up by 0.4%.
All right, everybody, all those private jets at New York City area airports that you're seeing waiting at midnight to take off, what's going on? Well, when it comes to taxes and the wealthy, every minute matters. That story's coming up next. First up, though, let's get a check on world and national news. Amy Morris, all yours.
All right, thank you, Carol. All 6 alternates have been selected. All 12 jurors are seated. The hush money criminal trial against Donald Trump could see opening arguments next week. The foreign aid and TikTok bills have cleared a procedural hurdle in the House. Lawmakers are working this weekend on the foreign aid package to Israel, Ukraine, and Taiwan, and that measure that would force TikTok to separate from its Chinese parent company, ByteDance. House Speaker Mike Johnson.
Even though it's not the perfect legislation, it's not the legislation that we would write if Republicans were in charge of both the House, the Senate, and the White House. This is the best possible product that we can get under these circumstances to take care of these really important obligations.
The plan largely mirrors the $95 billion foreign aid package that the Senate passed in February. Tensions escalating in the Middle East. U.S. officials say Israel launched a retaliatory strike on Iran. That's less than a week after Tehran's rocket and drone barrage. Secretary of State Antony Blinken at the G7 summit says the group of nations is urging de-escalation.
You'll see soon in the G7 statement a commitment to hold Iran to account for its destabilizing activities, holding it to account by degrading its missile and drone capabilities.
Iran says the attack was limited in scale and they're not inclined to launch a counterstrike. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Fresh lows for the S&P 500 index. We have got the S&P now at 49.61, a drop right now of just about 50 points, a decline of 1%. Dow Industrials holding on to a gain of 110 points, up by about 0.3%, while the NASDAQ Composite Index is now lower by 331 points, down 2.1%. 10-year at 4.61% with a 2-year yielding 4.97%. Spot gold today up 0.7% right now on the precious metal, higher by $16 the ounce. West Texas Intermediate crude oil up 0.5%, 83.14 for a barrel of WTI. A sell-off in the world's largest tech companies hitting stocks. Traders also shunning riskier assets ahead of the weekend amid geopolitical uncertainties. Speaking of tech names, Super Microcomputer had its biggest drop in about 2 months today after the maker of servers announced the date of its third quarter results, but did not pre-announce results. We've got Super Microcomputer down now by 21.7%. Recapping, the Dow higher, S&P, NASDAQ both lower, S&P at 49.60, a drop right now of 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, Tim, it's kind of hard making a lot of money. I mean, you need to log your days, prove where you are all the time, where your pets are, where your Peloton is. When exactly you are hopping on those private jets, it just isn't easy.
Well, all of this from one of our most read stories on the Bloomberg terminal. Bloomberg News New York politics reporter Laura Namias joins us here in New York City. Laura, I love this story. You open with just an incredible anecdote about what happens with private jets coming to New York City, or leaving New York City, I should say, and also SUVs that are just over state lines. Share what exactly you found in your reporting.
Sure. Well, the genesis of this story came when my counterpart in California found that the state of California has actually ramped up the number of audits that it's conducting to find out whether or not wealthy residents are in fact leaving the state. They've also increased the amount of money that they found. And so we reached out to tax attorneys to find out a little bit more about the ways in which the wealthy residents of New York and California handled their taxes when they moving out of the state, and flagging that on your tax returns is basically a surefire way to get audited by the states, both of these states, especially if you're a really high income individual. And the rules are so strict that some of these wealthy individuals are they're very careful about not tripping up the thresholds that would require them to pay the taxes, the income taxes that a New York full-time resident would have to pay.
Laura, listen, we've done so many stories, you know this, and this is actually the most read story on the Bloomberg in the past 8 hours, so everybody's reading it. So kudos to you and your colleague for writing it and putting it out there. It's interesting, but what's interesting is we have also talked about people leaving New York, going to Florida, especially in the financial community because of the lower tax environment. Having said that, what constitutes making you a Florida resident officially versus a New York? You know, how many days do you have to be there, and what constitutes a full day in one state versus another? I mean, it's the devil's in the details, I'm assuming.
Yeah, it's true. So there's two ways that you can be a resident in New York, and this can surprise people sometimes. If you have a house here and you live here and it's your main residence, then you're a resident. That doesn't seem that surprising. But you're also considered a resident if you maintain something called a permanent place of abode in New York, and you are physically present in the state for 184 days. So after 183 days is the threshold. So that means that people who, especially incredibly wealthy people who maintain more than one home, if they maintain a home that is livable year-round in any part of New York State and are physically present in New York for 184 days or more, then they are liable for New York state income taxes.
So you have to pass the teddy bear test. You know what that is, Tim?
The teddy bear test. It's not just about teddy bears, Laura. Explain what exactly the teddy bear test is.
So when you get audited, this was so fascinating to hear from the tax attorneys. When you get audited, auditors are going to look into every aspect of your life. They're going to look at your bank records, your phone records. Sometimes tax records show that they've asked for full lists of your medical doctors. We saw one case in which a person, provided evidence that they were seeing their OBGYN on a day in Florida on a day to prove that they were in Florida. But the teddy bear test is auditors are looking to see which residence you use to house items that are near and dear to you. So the stereotypical item is a teddy bear, something you love and treasure. But for various people in these tax cases, that near and dear teddy bear-esque item could be their Peloton. It could be a vintage sneaker collection. It could be any number of things that are incredibly special to them. And if they keep that in Florida, it's more suggestive that they actually live in Florida than in New York.
Well, I'm just going to say to you, Carol, if you are worried about, income taxes and you don't have a Peloton in every home, then come on, you got to have a Peloton in every home.
That's right. That's an easy fix. What about the family dog? Where does the family dog have to be?
Well, if you say, for example, that you live in Florida, but you keep your dog in New York and your dog's veterinary records show that the vet is in New York, then it is more suggestive to auditors who are really well-trained investigators that your dog lives in New York, and it's probably likelier that you consider that your primary residence than Florida.
Fascinating.
The reason we're talking about all this, Laura, is because it's a serious issue for New York State and increasingly becoming a serious issue in California, though there are differences between the states. Talk a little bit about how important these wealthy taxpayers are to New York State's coffers, how much they've been able to recover in recent years, and what happens if these wealthy residents are successful in completely fleeing the state and not paying income taxes here.
Yeah, so both states are really reliant on their high earners for income tax revenue. New York in particular, somewhere around 45% of its income tax revenue is coming from the very top percent of earners in the state. And so what that means is that the state's revenue is really sensitive to the flight of even a handful of individuals. And this is something that we're using to help prop up our, for example, $237 billion state budget. And we're talking about money for schools, Medicaid money, fixed costs that seem to grow every year, and we're relying on the income tax revenue from a very small handful of people. So if they leave, it could be potentially problematic. This is something that state tax officials and state politicians have talked about for years. They've wondered whether tax policy really has an influential effect on whether or not the super rich people leave New York. And what it seems like, at least anecdotally, and they're still studying this, is that it hasn't had that much of an impact prior to the pandemic. But the pandemic, the ability to work remotely, maybe combined with a more favorable tax policy in another state, could be just the straw that breaks the proverbial camel's back and convinces you to maybe relocate somewhere else.
I thought it was interesting, too, you include in the story, although the total number of taxpayers leaving New York and California from 2020 to 2022 was highest among low and middle income people, as you just point out, the flight of the richest individuals has an especially large impact on budgets, and this is why we care, and this is why it's a really interesting story. Hey, last point, though, the cottage industry that is rising as a result, all these apps to kind of track where they are?
Yeah. So yes, tax attorneys told us that there's just a panoply of apps available now that not just for rich people, but for people who consider themselves digital nomads, young, upwardly mobile people who like to telework from Tahiti or, from Italy or something, and move around quite a lot. It's very hard to keep track and keep a paper trail of where you physically are. And these apps are doing capturing that data for you, so you don't have to proactively keep a record of your own days. And that becomes very helpful come tax time.
My dogs, my bed, my teddy bears, my Peloton, they're all in New Jersey.
And you're only traveling to New York, so
right. Little subway ride every morning.
It's
and
not really helpful when it comes
evening.
to your taxes, I'm sorry to say.
No. Just got to work on some other things. All right, listen, this is a great story, the most read story on the Bloomberg on this Friday. Laura Namias, thank you so much. So glad we could break it down with you. She's New York politics reporter at Bloomberg News, joining us right here in New York City.
Coming up straight ahead, stocks on track for their third straight weekly decline as the S&P 500 breaks below 5,001. The trade and the outlook in Options Insight.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Mark. Let's get to Options Insight and more on the markets. With us is Bloomberg News Markets correspondent Abigail Doolittle and a voice well known to our world, University of Akron Endowment Chairman Dennis Gartman. Abigail, all yours.
Thanks so much, Carol. And Dennis, great for you to join us today. And, you know, I love to hand out congratulations where they're due. And I feel as though this is really true for you, because when you joined us for Options Insight last November or December, you made the very bold call that you could see us having a bear market this year. You also said that that time period reminded you of this change between 2021 and 2022. Now, bearish divergences have gone on longer than anyone could think. But right now, I'm looking at this S&P 500 on the month down 5.6%, heading to its worst month since December of 2022. The Russell 2000 down nearly 10% in the month of April, heading to the worst month since September of 2022. How much worse do you see this getting? Do you think that bear market really will happen?
I think the bear market is just beginning. I think it's going to happen. I don't think there's any question about it. The fact that we're only down about 5 or 6% from the highs in the S&P, maybe 10 or 11% from the highs in the Russell 2000. I think it's just starting to get going, and I think the public is now becoming aware of the fact that prices have begun to weaken. So it's a little dismaying that the Fed is clearly not going to be cutting interest rates as much as people had thought. I thought it was almost comical 2 and 3 months ago that the expectation was that we'd have a 3 to 4 cuts in the overnight Fed funds rate, maybe even 5 to 6 at one time. I maintained that we'd be lucky to get 1 or 2. Now we're going to be lucky to get 1. That's weighing on prices. And I think the psychology is beginning to change. So yes, I think the bear market is beginning. It's been long overdue, but I continue to be bearish on stocks and quite bullish on gold. I've been very fortunate in the past month and a half. Let's hope that that good fortune continues.
Absolutely. No one deserves it more than you, or at least you deserve it as much as anyone else does. And bringing in the Fed, that's really interesting, because the Russell 2000 is almost down on its 200-day moving average, looking likely to slice below it. Probably the S&P 500 follows fourth, given the fact that those small cap stocks are a little bit more sensitive to the Fed. But gold and the Fed, talk to us about why we're seeing record highs here. Does that have to do with the Fed as well?
I think the market wants to understand that the buyers have been central banks around the world, predicated upon the fact that the United States seems to be a less strong ally and somebody capable, or a government capable of not just freezing assets from the Iranians and the Russians, but to actually take the assets from the Russians particularly. That, I think, is causing some concern. That's a reason for the Chinese to be a strong a strong and consistent buyer of gold. The Russians have been strong and consistent buyers of gold. The only thing that bothers me about gold is that the public is now beginning to buy gold. That's always they're always late to the party, but I think that they still have some time to enjoy a movement that has been extant now for several years. And what's important is this is more than just a dollar-denominated gold move. This is a euro-denominated gold move and a yen-denominated gold move. So it's gold going up in all currencies across the board, and I think that we need to pay attention to that fact.
So geopolitics weighing on stocks, in part helping out gold, and that VIX, well, it's at a 19 handle. I'm guessing if you're bearish on stocks, Dennis, you're bullish VIX. Thanks so much for joining us for Options Insight. Dennis Gartman, the former editor of the Gartman Letter and the chair of University of Akron Endowment. Carol, back to you.
All right, so appreciate it. Our Bloomberg News chief markets correspondent Abigail Doolittle there with Options Insight. All right, folks, getting ready to wrap up on this hour of Bloomberg Business Week. If you're watching on television, the close is coming up next. For those of you staying with us, we're going to check in with the dean of the INSEAD Business School. We're also going to talk about the Bitcoin halving, and what else do we have?
How about trading a career in a London office to go to France and make rosé?
Sign me up.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are just 1 hour away from the closing bell on this Friday, April 19th, getting ready to wrap up the Friday trade, the week trade. It's been a stressful one for stocks, but it all has to do with kind of a rate reset. But we're also, geopolitics continues to stress out, certainly, investors for good reasons.
Yeah, we're certainly seeing that reflected in the trade today. Also, the reflection of higher for longer, Carol. The S&P 500 down a full percentage point right now. The NASDAQ, wow, losses accelerating down 2.2%. Hey, we got a lot coming up over the next couple of hours. We're going to be joined by the Dean of INSEAD Business School. It's one of the top business schools in the world, based in France. And looking forward to that conversation in just a couple of minutes.
Yeah, always curious about what's kind of top of mind for the heads of the business school community in terms of what are they thinking about leaders will need in the years to come. One of the topics, AI. We're going to dig into that with him in just a moment. Speaking of AI and technology and innovation, the Bitcoin halving, it's here?
It's getting here.
Okay.
All right. Today, tomorrow. You know, it's like you can't time it exactly right, but it's around this time.
You know what, Bloomberg, we like, specifics, exact moments.
We still don't know who Satoshi Nakamoto is either, so.
Not hold my breath on that one. All right, plus David Weston is going to stop by. He's got a preview of Wall Street Week. They've got a lot on tap, certainly, again, this week.
And how about a little bit of rosé on this Friday, Carol?
Don't have to twist my arm.
Okay. I think Charlie Pellet just said he wants some, too. He gave up a career in an office in London to move to France to make rosé. We're going to be joined by the owner of Maison Mirabeau.
All right, first up, let's get to the aforementioned Charlie Pellet with a check on the trading day. Charlie, all yours.
I thank you very much. And equities falling at the end of a week that saw the S&P 500 dropping below 5,000. I'll add a qualifier, well below 5,000 now, 49.59. We've got the S&P down 1%. As Tim mentioned, Dow Industrials up 123, higher by 0.3%. NASDAQ lower by 350 points now. For NASDAQ, the composite index, a drop right now of 2.2%. We've got the VIX, we've got the Russell 2000 lower by 0.5%. 10-year, 4.61%, with a 2-year, 4.97%. Spot gold up 0.7%, 23.96 an ounce on gold. West Texas Intermediate up by 0.9%, 83.46 right now for a barrel of WTI. Netflix cannot ignore that stock today after earnings report last night. Netflix right now trading lower by 9.1%. Netflix tumbling as a weak forecast for revenue and a warning that the streaming giant will stop reporting subscriber numbers in 2025, overshadowed an otherwise strong start to the year. So again, recapping, S&P lower by 50 points now to 49.61, a drop of 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, all right, Charlie, thank you so much. Getting ready to wrap up the week. I was looking at the numbers overall.
What are you seeing?
Yeah, well.
Is it pretty or is it not pretty?
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Important part of our world. We do have to start, though, with kind of the general macro environment and politics on campus. You've certainly had to deal with it as a leader. What is kind of the role of heads of educational institutions in your view when it comes to protection of academic freedom, diversity of thought, freedom of speech? You know, a wise individual said to me, one of our producers, the freedom to make mistakes, especially as students, happens in a safe environment, an academic environment. That's where we learn and are enlightened. Help me make sense of the challenges you guys are facing in this geopolitical environment.
Good afternoon, and thank you for the invitation to be here to contribute to these important conversations. You know, a lot going on in business schools, as you were saying. I think the key element is exactly what you mentioned about creating a safe, secure, and supported environment for the community. And this has certainly been our focus at INSEAD. And we have one of the most diverse student bodies that you can have. I mean, as we usually say at INSEAD, in your classroom, everybody's a minority, and that's really what it is. I mean, no nationality or ethnicity has more than 10 to 15% of the population. And that has meant that we've worked very hard with our student body to create that environment for dialogue, for understanding. And our students are telling us that that is what's happening. You know, I have been personally meeting with students from different, sensitivities, different nationalities, and asking them what's happening on campus. And in our campus, we're having a very positive and productive dialogue. That does not mean that there are no sometimes frictions and tensions, but not in a way that has led to difficulties. On the contrary, the community feels very supported and safe, and that's where we are.
Hey, Dean, I want to take a step back and just explain how INSEAD is different, because I think a lot of people who are listening perhaps are in the U.S. and they're used to what happens in a 2-year MBA program here in the United States, but that's not what you get at INSEAD.
No. So INSEAD has been the pioneer school with a 1-year MBA. And so we've started that many years ago. And we're also a very global school. So we started in France, in Fontainebleau, in the Chateau de Fontainebleau. That's our heritage. But 20 years ago, we opened a campus in Singapore, our Asia campus. And 10 years ago, we opened a campus in Abu Dhabi. And we have now a hub here in San Francisco. And so our school is extremely global. I mean, a third of our activities at the moment are out of Singapore. And this is part of our ethos, because the way we position ourselves is the business school for the world. And that is about the environment that we create at all levels. And certainly as a student, as I was just mentioning, when you embark on our transformative journey, it's super intense in how you engage, but it's also super intense in this human dimension because of this very diverse space that you find. And the fact that we do create this environment means that there's a lot of openness from the students to learn from the others, because one of the things that they marvel from the beginning is that they enter that space and see, how can I possibly find something in common with such a diverse group? And after a day, they find out that they have many more things in common than they thought. And this is an amazing discovery experience, of course, on the top of the amazing quality of our faculty, the high-level delivery that we do. And this is part of that learning experience that they have.
Well, and I wonder, and Dimitri, I want to bring you into this, because I do think about we're in a world where technology can bring people closer, students closer from all over the globe. And there's some interesting reporting that you guys have all done, or Bloomberg News has done, about kind of the role of AI in all of this.
Yeah, I mean, I think AI is really transforming so much. And it's interesting because we went from this place of being terrified when we were first being exposed to some of the more, kind of out there applications of it over the last 2 years. But, in the ways that it'll be used to enable more flexibility and more students from far far-flung places to really engage in something, to something as recently as what we reported on this week, which is the ways in which maybe something like AI will be brought to bear in how academic paper and research at business schools will be measured for purposes of accreditation to see whether or not, to analyze whether or not the story we wrote about was a program that some folks at a school in Philadelphia developed, and it is a way to see, well, are you upholding and really, supporting sustainability measures as set out by the UN. So it's really interesting the ways in which this particular innovation has a role to play. I think Francisco probably has a lot more to say about that because I know he's focused a lot specifically on technology and innovation. But before I throw it to him, the other interesting point that I don't know if he mentioned, but Singapore is a big campus of theirs, and it's it's almost as big and significant in size as what's happening in Fontainebleau. So that's a big direction for what's happening in B school education also, just to underscore that.
Well, it's interesting, and I'm glad you brought that because it's like that balance right between physical plant, but also what technology can do.
Yes.
So come on in on that.
I think that this is quite critical, as you said, and it's interesting the point that Dina just made, because we did a recent survey with our alumni. We have, basically 70,000 alums, and we asked them, what do you think about AI? Gen AI in particular, how is that, factoring in? And one thing that's very interesting is that, over half of the respondents said that they're actually more excited than concerned. And so this is about, how is this something that you see as an opportunity or not? And about another 40% said that, they have some concerns, but mostly positive, and only a very small minority thought about these that being something that they're overly concerned. So in fact, I think people that feel empowered in their learning trajectory, in their professional trajectory, I think are seeing these as an interesting opportunity. That's one aspect that I thought I would be highlight. Certainly, we're seeing that from our alumni.
It's nice to hear the positive because we do, right? We do get a lot of the horrors potentially.
Exactly, and that's why I was mentioning, because I think it is important to say that in this survey, the majority felt actually very positive about the opportunities.
It's interesting. I had a professor from an institution from Columbia in a discussion recently, and the point was really more, to really get at the fear, you need to, don't think about this as something that's going to come in and replace a job, a position. It's task-based, and as a task-based tool that can transform things, it actually might make your job, it might eliminate your job, but it also might make your job better and easier.
Not looking at me, so sorry, Tim.
Sorry.
I'm recording your
job.
It's this idea of
this comes back to also to what we do at the classroom. This is
Thank
quite
you for not
important
looking at
because, business schools really have a very important role to play in this discussion on different dimensions. So first is, of course, to help us all understand what's going on. This is a transformative technology. It's affecting every sector, every business. We need to understand what's going on, what's working, not working, how are people using this technology in a productive way. And that's what a school like INSEAD can do, through the cutting edge research. We have faculty that have been already looking at these even before Gen AI got to the stage that it has now globally. And this is something that we're bringing to the classroom and also bringing to our executive education. We have a very successful program on transforming your business with AI, which is an example of bringing that to the executive population on a more immediate basis, but bringing that to the classroom, from the research, which is quite important so that people understand. The second one is make students feel comfortable about using these tools in the classroom as they're going through their learning journey.
Right.
Take the example that Dina mentioned just now. In all dimensions, the university and the business schools has to be a safe environment to experiment, to learn. So if we're not bringing that to the way that we do things with the students, then we're not fulfilling our role as a leading business school.
It is a place to make mistakes. I always feel like education and kind of think through things.
Exactly. And the third thing that I think is quite interesting is actually to think about how you can create new tools, new approach to education itself through these new tools, which is, of course, something very important because, in INSEAD, we see ourselves as at the cutting edge of business education. So it also means we have to think about how do we use that to create different tools, different approaches in education itself.
So can you talk a little bit about employment after INSEAD? Because no question that is the reason why people go to business school. It's to get jobs that earn more money after going to school, and then also potentially to pivot and switch careers in addition to lifelong networking. But what are the companies, the types of companies that are recruiting at the business school right now? Because I think a lot of people here in the U.S. would say, okay, well, it's consulting companies are huge for schools in New York. Finance, of course, is huge for schools in New York. Increasingly tech in recent years, obviously. But how does that look at INSEAD?
In some dimensions, it's not that different, right? I mean, consulting is a very important part of the outlook for the students that join us. Finance as well, but not to the same extent as the schools in London or New York. That's not to be surprised. And tech is increasingly important. The two aspects that is also quite important for us is an increasing presence of entrepreneurship and the role of entrepreneurship. You know, PitchBook last September did a very interesting ranking of what were the schools globally that were generating more startups over the long run, and basically INSEAD came out fourth globally, our MBA, which was very interesting. Then the other part that's quite substantive on the case of INSEAD is perhaps less on the industry. We have a variety of industries, but more on the geography. The placement of our students is really global. I mean, for example, over the last few years, and this is in particular, the number of the Gulf countries overtook London as the most significant placement area for our graduates, because the population that we get is extremely international, extremely mobile. So they look for opportunities in a global scale. And this is one of the things that is super interesting about our population, is how our students really look and say, okay, maybe it's Singapore, maybe it's Malaysia, maybe it's the UAE, or maybe it's London or Paris. And it's in that dimension that I feel there is a very visible difference from some of the, perhaps US-based business schools.
It's significant because I feel like a lot of the reporting is a lot more on the Mideast and the money and the innovation and spending that they are doing right now.
So, Francisco, I mean, here in the U.S., one of the sort of tensions and pressure points in the past year or two, though, on the jobs front has been contraction to some degree. I mean, those are still definitely the leading industries, but there's still a lot of fear and a lot of concern about what we see happening with the consulting jobs, with the finance jobs, certainly with the tech jobs. The layoffs have been continuing. It wasn't just the story for 2023, it was also for 2024. To what extent has that affected your students coming out? And we did a story last spring, and it was affecting our schools and graduates at the highest levels of the ranking, like Harvard grads all the way on down, who were graduating without jobs and feeling very nervous.
And we just have about 45 seconds.
Yes, and it is also having some impact, because of course there's less opportunities on these, and so which means that our students are finding also other opportunities as well, because we're seeing just less jobs available in those industries. So they're doing these two dimensions. One is the geographical element. So perhaps they're interested in consulting, and they say, okay, if you want consulting, you may have a good opportunity in the Middle East, but not in London, for example, or in New York. The other part is to look at other industries. And for example, a big push that we've had over the last few years for example, to look at sustainability and to look at the energy transition. We're also very much supporting our graduates to explore these other aspects of the role that business schools can have, to explore these new opportunities in terms of, for example, energy transition, sustainability, and all of these elements that are picking up around the globe, and where we feel that we are training our graduates to lead on that, and very much interested to be and to continue to be at the forefront of this.
Interesting time to be leading a top business school. It's got to be fun. Dean Francisco Veloso of the INSEAD Business School joining us here in studio, along with our own Dimitri Kesanidis, senior editor at Bloomberg News. Thanks to both of you. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the closing bell. Losses for the S&P 500 index. The Dow, yes, holding on to gains, but NASDAQ lower as well, particularly hard hit. We begin there with the NASDAQ Composite Index right now trading lower by 321 points, down 2.1%. S&P down 45, a drop of 0.9%. Dow Industrials up 162, now a gain of 0.4%. Equities are falling at the end of a week that saw the S&P 500 fall below 5,000, right now at 49.65, following a rally that set the benchmark to records and spurred warnings for a consolidation. 10-year yield, 4.61%, with a 2-year right now, 4.97%. We've got spot gold up 0.6%, $23.94 the ounce, and West Texas Intermediate crude up 0.7%, $83.30 for a barrel of WTI. Geeta Gopinath is first Deputy Managing Director at the International Fund, and on Bloomberg Radio this morning, she spoke with us about the outlook for the price of oil, given all of the uncertainty in the world right now.
We have supply excess capacity in Saudi Arabia. We have non-OPEC countries putting a lot more oil out on the market. So there are other sources of supply that can, buffer these shocks. But if there's a large-scale escalation in the Middle East, that is a problem.
And again, crude oil now at $83.30 a barrel, talking WTI Brent, the global benchmark $87.34, up now by 0.3%. Recapping S&P down 0.9, 49.65. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Carol, it's upon us.
Do I need a drum roll here?
No, you don't.
Sure.
Because it'll happen again in 4 years.
Digital
I'm talking,
drum
of course,
roll,
about
perhaps?
the Bitcoin halving or halvening. Essentially, it's a planned reduction in the rewards that miners receive, and they happen once every 4 years or so. More precisely, every 210,000 blocks of transactions. The big question, though, is what happens to Bitcoin's price after all of this? And for that, we turn to Bloomberg Intelligence Senior Commodity Strategist Mike McGlone, joining us from our Miami bureau. So, Mike, our own executive editor for crypto, Stacey Maria Schmel, wrote earlier today, quote, "The historical record has shown rallies in the largest crypto token after the halving. Strategists at banks, including JP Morgan and Deutsche, say that this time the halving is pretty much priced in." What do you think?
I think it's more the latter. We've only had 3 halvings. This is the 4th, so it's not really a good statistical example. And the key thing that's different this time, Tim, is we had a near perfect storm for higher prices. We had the ETF launches on Bitcoin. Everybody was looking forward to the halving. Beta was taking off, record highs in the stock market, record highs in the gold. We had all this Fed easing priced in. Now we're kicking into the hangover and everything. Beta's gone down. Bitcoin's rolled over a little bit. It made a record high, and the only thing that's still going up is gold. So that old analog gold is kind of beating the digital one a little bit. So I'm worried that we've already priced in a lot of the good prices, and the key risk for Bitcoin now is, does it trade more like beta, the stock market, on the way down, or does it trade more like gold? And it's proving it's more of a highly speculative digital asset. We've already had a lot of that oomph from the ETF launch.
Yeah, that's what I was going to say. I mean, we've got, Bitcoin up about 1.4% in today's session. Yeah, I guess that's what we need to kind of think about, what it is going forward. I've got to say, I continue to scratch my head about kind of how we look at it. Having said that, I mean, are there levels you think about, Mike, when you look at Bitcoin?
Well, right now, 60,000 in Bitcoin is basically almost synonymous with 5,000 support in the S&P 500. We just broke that. And the S&P 500 looks like we're going to close it below it. So we'll see how Bitcoin trades out on Monday after weekend, and see how things happen with geopolitics. But if it can sustain above that 60,000 with beta going down, that's a sign that it's bucking beta. And I think that's still unlikely. The key thing about Bitcoin, it trades about 3 times the volatility of gold and the S&P 500. And it's more likely to have a problem if the S&P 500 goes down. And it looks like beta's overdue for a backup.
Okay. Hey, I want to get back to what's going on with the halving here, because...
You mean explain it?
Yeah.
It's funny because that's a good point, because we kind of throw these terms out, Mike, and it's like we just assume everybody knows.
And I explained it a little bit, Mike, but can you a lot of this has to do with, and a lot of the impact that this will have will be on miners, and we've been talking a lot about that on Bloomberg Crypto over the last few weeks.
It's kind of a bummer for them, right?
It is, but again, they knew this was coming, and what they told us is, like, we've been preparing this since the last we've been preparing for this one since the last halving. But can you talk a little bit about what exactly is going on here?
So the amount of Bitcoins that everybody can, that all the miners in the world can mine right now is 900 coins a day. As of the halving, which is going to happen tonight or tomorrow, that'll cut to 450, and it'll stay that way for the next 4 years, and then 4 years from now it'll cut again. To me, it's the aspect of definable diminishing supply by code. So as a commodity guy, I look at that as, wow, that's kind of unique. If you can define that supply going down by code and you see increasing demand and adoption, rules of economics say prices over time must go higher. Now it's a question of how much. They've already gone up a lot. But to me, that's the significance of you can't create more than 950 coins a day as of tomorrow. And that's part of that number go up technology that's benefited Bitcoin.
You know what's funny, as you're saying this, and you're a commodities guy, you've been doing this for years, Mike. I was thinking about oil supply and the way that oil supply changed with the discovery of hydraulic fracturing and the way that that just opened up so much more when it came to oil. So talk a little bit about sort of the similarities here.
Well, Tim, you just described that high price cure. I hear that from farmers all the time. When prices go up, they produce more and it squashes demand. And that's the same thing that's happening in crude oil. The high price cure is kicking in, and that's why it's a downward trajectory. And you have to basically get to a low price cure, which natural gas has, which I think is crude oil is still going to do. It has to get kind of cheap. You don't have that in Bitcoin. And the only other commodity you really don't have that high price cure is gold. And you see what's happening. It's still going higher. So that's the unique thing about Bitcoin. It doesn't have the high price cure. But what it does have is one of the best performing assets in history, and it's gone up a lot already.
So how is someone, we've had conversations with you certainly throughout this kind of digital currency craze, Bitcoin craze, if you will, or the ups and downs of Bitcoin. I mean, how are you thinking about Bitcoin and its role in the financial markets as an investment? I mean, have we really clearly identified exactly what it is here and what its potential uses, or is it just something like a great investment, but I don't know where it goes from here?
Well, I think that's the question answers the question, because it's the key. The way I look at it, Carol, is the world's going digital. This is a digital gold. Do you really want to take the risk of holding that old analog without some digital in that space? And that's why I've looked at overall. And I think gold investors get that. And ETF as investors get that. That's the thing that's really happened this year. We've had significant inflows in new Bitcoin ETFs, and we still have significant outflows in gold ETFs, despite the fact gold's going higher. So that out-of-favor asset's doing well. But the way I look at it, the world's going digital. This is digital gold. Why take the risk of not having some? I think most investors are getting that, and I have to admit I've been saying that for about 5 years.
How much should they have?
Yes, that's the key question. Most people, I think, just have to get off zero, starting with a few percents. And the key thing I like to point out is if you haven't, I think it's a good reason that gold is not much higher than it is now, because you ask a typical 30-something, they don't care about gold. They're more into cryptos. But that's the difference. There's Bitcoin, and then there's 30,000 wannabes. And those are massive speculative digital assets. Don't underestimate. That's great for speculation. Bitcoin is definitely for speculation, but it's more buy and hold. The key thing I want to point about Bitcoin is come this weekend, it'll be the only major asset in the world that'll still be trading. So if there's something risk on or risk off, it's probably the first one to reflect that.
I think a lot of people were reminded of that after we saw Iran fire missiles and drones toward Israel on Saturday, and then you saw Bitcoin get to about $60,000. Mike, do you consider how do you think about the volatility of Bitcoin in the place in a portfolio? Because it doesn't necessarily provide stability. I don't see that. Talk about correlation here.
That's so important. Volatility adjusted, Bitcoin should be a small portion. So like I said earlier, it's about 3 times the volatility of gold and S&P. 5 years ago, it was 10 times the volatility. See that trajectory? As more people get into space, more buyers and sellers, the volatility should continue to get swashed. I think it's going to go towards the volatility of gold. It's just going to take some time. The key thing is, though, it's much higher volatility than beta and gold. So if beta goes down, Bitcoin's probably going to suffer, and that's what we're seeing. Every single, gold, Bitcoin, and S&P 500 all made record highs in Q3, and only one of them is still making record highs now, and that's gold.
All right. I know we brought you on to talk halving, or the halvening, if you will. But I'm curious, when you look at the commodity space right now, Mike McGlone, what's the most interesting story here? And I'm especially thinking right now for our investing audience.
Gold up, everything else bumping up against good resistance, and the biggest risk to all commodities is if the stock market continues to go down. But I see gold as an enduring bull market. I see crude oil as an enduring bear market, bumping up against the upper range. And I also see grains doing the same thing. If we have a normal prop weather year, we should see all commodities get to the low price cure, following the example of natural gas, with the exception of gold.
Okay. Big picture, take a step back. Just our last question to you, just about the economy, because these commodities tell us a story about the economy. What's the story about the economy you're seeing right now?
When you think about commodities, have to start with China and the fact that the Chinese government 10-year note yield dropped to 2.25% today, the lowest ever in our database, shows you significant deflationary, recessionary forces in that country, which is bad for commodities. And I think we should not underestimate what the bond markets are telling us for deflation potentially kicking in.
All right, you're a gem. Hey, have a great weekend. Mike McGlone, he is Bloomberg Intelligence Senior Commodity Strategist. Mike McGlone joining us from our bureau in Miami. And just looking at Bitcoin right now, had it up here, it's up about 1.3%, so we're looking at about $64,336. Is the price right now. So we're down from some of the highs we saw earlier. Not today, but I'm just talking high back in mid-March of above 73,000.
Yeah, and off of the lows that we saw over the last couple of weeks as well.
Yeah.
Hey, Carol, we're still seeing stocks lower as we do get closer to the close here.
Mm-hmm.
The NASDAQ Composite down more than 2%. The S&P 500 off its lows of the days, but still down 0.9%. The Dow up 0.5 of a percentage point.
Yeah, quick check in terms of the U.S. rates curve. You got a 10-year right now at 4.61, a 2-year note with a yield of 4.97, so just below 5%. All right, let's get a check on world and national news. Back to D.C. we go, and Amy Morris. Amy.
Thank you, Carol. The jury's been seated. It looks like there will be 2 court hearings today, one in front of Judge Juan Merchan, who will hear a request from prosecutors to use different kinds of evidence of prior bad acts by Donald Trump. Now, the other hearing will be across town, a whole different courthouse, where Trump's team will ask the Appellate Division First Department about the case. They've argued that Trump cannot get a fair trial in Manhattan. The foreign aid and TikTok bills have cleared a procedural hurdle in the House. Now House lawmakers will be working this weekend to hold votes on the foreign aid package to Israel, Ukraine, and Taiwan, and a measure that would force TikTok to separate from its Chinese parent company, ByteDance. House Speaker Mike Johnson.
Even though it's not the perfect legislation, it's not the legislation that we would write if Republicans were in charge of both the House, the Senate, and the White House. This is the best possible product that we can get under these circumstances to take care of these really important obligations.
Now, the plan largely mirrors the $95 billion foreign aid package the Senate passed in February. House votes are expected to begin around 1 o'clock tomorrow afternoon. The Senate will take it up next week. As long-stalled Ukraine aid inches ahead on Capitol Hill, NATO's pledging to help plug the holes in Ukraine's air defenses. That story from Bloomberg's Nathan Hager in Washington.
NATO Secretary General Jens Stoltenberg met virtually today with Ukrainian President Volodymyr Zelensky. Afterward, he said allies have identified additional air defenses for Ukraine, including Patriot and SAMP-T systems. Stoltenberg didn't provide specifics on which countries would provide them or how many systems would be coming in, but he said allies that don't have the weapons have promised funding, and they're also working to send spare parts for systems that are already in Ukraine. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, the S&P, NASDAQ, both in the red. Looks like 20 minutes to go. We're going to see the S&P close below 5,000. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. It's been a tough day for tech stocks, with the Dow currently up 158 points, but S&Ps are down 51 and NASDAQ is lower by 2.2%. The U.S. 10-year yield of 4.61%. Gold is up 15. Oil is also in the green, and Bitcoin is higher by 1%. Among the main 11 S&P sectors, leaders were utilities and financials. Tech and telecom led to the downside, and leaders to the upside in the Dow. American Express, after earnings, rose 5.6%, while Amazon and Intel were under pressure. Also, after earnings, Netflix fell 9%, and in the tech space, Supermicro plunged as much as 23%, taking NVIDIA down with it. NVIDIA fell as much as 10%. That's the most since 2022. Wrapping things up, Peloton hit a record low. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type squawk on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. Getting ready to wrap up the Friday trade, also the week overall, a week where we know it's a trend line, not great one for the S&P 500. We would be down 3 weeks in a row. Haven't seen this in some time, but it's okay if you're trying to be a bear in this market, but if you're got some bullish overtones in your portfolio, that makes it a little bit more tricky.
Yeah, worth also noting that the yield on the 10-year hit its highest since November over the Fed reset. This idea that the Fed's resetting the clock and on cuts and reevaluating the trajectory of price growth. And we've got a great guest to help us, get an idea of really what's going on and make sense of rates plus equities as well. Janet Rilling is Senior Portfolio Manager and head of the Plus Fixed Income team at Allspring Global Investments. She joins us from Wisconsin. Janet, how are you?
I'm good. Good afternoon.
Yeah, good afternoon to you as well. I do want to start with what happened with yields this week, because we certainly saw a reset from the Federal Reserve, and I think that expectation is certainly playing out when it comes to the rates market.
Yeah, so this is really the data dependency playing out, right? The Fed has told us they're going to be data dependent, and when we see the data change, they're going to change. So what have we seen happen? We've seen stronger growth than expectations, a more robust job market, but most importantly, elevated inflation. And that's what's caused them to make a change in their view. They've been communicating a more hawkish tone. Powell earlier this week indicated a shift in that view, and that certainly has resonated in the fixed income markets.
All right, speaking of shifts in tones, we're just watching shares of NVIDIA right now, extending their drop to 10% right now as we speak. So they're erasing about $212 billion in market cap value when it comes to NVIDIA. So again, this has been, one of the standout performers, best performing name in the S&P 500 last year. It was another top performer already this year. I mean, the stock perspective, everybody, it's up about 53% this year, but we are definitely seeing a very different tone in today's trade.
NVIDIA goes down also?
Stocks go up, stocks go down, but it's interesting. I'm just going to pull up real quickly on the Bloomberg a GP chart, and in terms of the trend line, like you've seen a little bit of a rollover here.
Yeah.
Certainly, if you go back to when it peaked, kind of back in late March, so you've definitely seen a move down and definitely a move down lower in today. Again, extending the drop to 10%. So we talk about corrections.
Well, likely we'll see it move fall or close below Carol's 50-day moving average for the first time, going all the way back to November.
Yeah, so this is why we care about what's going on. These are names that have been really propelling some of the momentum in the markets. All right, back to, though, what's also been propelling and changing the momentum, and is that move up in rates. Going back to Janet Rilling, who's over at Allspring Global Investments. She's head of the Plus Fixed Income team. So I am curious, Janet, we've talked about, the changing narrative from the Federal Reserve and the changing narrative around U.S. Treasury rates and what we've seen along the Treasury curve. When is it that you guys pull the levers for your investors saying, you know what, now it's time to kind of change our strategy on the fixed income side of things? Is now the time, or did you do it already, I don't know, a month ago? I'm just curious.
Yeah, we're certainly a team that's active in rates positioning. Last year, we had a long duration position on, given our expectations that we were at the terminal rate by the Fed. We did neutralize that coming into this year, so that puts us in a good position to be opportunistic with the changes in rates. Earlier this week, we saw the 2-year briefly go above 5%, and I would say that was a point we thought it was worth nibbling a little bit. So we are watching closely and watching for an opportunity to add duration if there's continued upward pressure here on rates.
What would prompt you to add to the portfolio right now? What would prompt you to buy? What do you need to see on the rates curve?
Yeah, well, part of it is just outright levels. If we start getting above 5% on the 2-year, that's looking pretty attractive to us. While the Fed has turned a bit more hawkish, we are not expecting them to raise rates, particularly in the next several quarters. So a 2-year above 5% seems like good value to us, where we can start collecting that yield, and there's not the pressure of it going up much further.
But when you say about adding duration, how far out on the curve are you willing to go, and does it make sense? I'm just thinking for investors, especially, you know, I don't guess if they are thinking about, you know, almost 5% on the 10-year. If we go back there, I mean, how many are saying, you know, this isn't a bad shift in my money, and a way to kind of lock in an expected return, if you will, with maybe less risk that we might see on the equity side of things or some other investments?
We are more constructive on the front end. So a place we are overweight is the 5-year. More in the 10-year space, we're more neutral. And as we go out further in the 30-year, we do have an underweight position because we think the range of outcomes there is much wider. You have issues with if inflation does accelerate further, the long end will be hit a bit further. And certainly there are some technical pressures related to funding for the government for the ongoing deficits that we are running.
What do you think we could top out, or where could we go above on the 10-year?
Well, certainly earlier or late last year, we hit 5%. And
Right.
so certainly we could retest that 5% area. But our base case puts it probably a bit below 5%. I mean, currently today we're at 461. I think we hit about a 464 earlier in the week. I mean, there's certainly room for it to move up some from here. But given our outlook, we would think that 5% would be a good place to start adding.
Sorry, 5% on the 2-year or the 10?
10.
On the 10-year.
I mean, that's interesting because we've spoken to a lot of folks who said, you know, within this cycle, we think we're not going to hit 5 again. We think that the peak happened back in October. What say you?
But you think it'll be below 5%. You'll think it's more like
Yeah, our base case is below. My point was if we do retouch 5%, that could be a buying opportunity.
Okay.
Beyond the U.S. Treasury curve, where else in fixed income do you find the best opportunities right now in this environment?
Yeah, we think it's a good time to be diversified in your exposures. So we run a Core Plus strategy where we can use a lot of the global fixed income sectors. So we do have an allocation to investment grade corporate credit. It's more of a neutral allocation, but we think it's a good place to be, particularly the BBB part of the investment grade credit space. You get a bit higher yields there. And with the strength we've seen in the U.S. economy, we think that those companies will be stable and able to continue to service their debt well. In terms of high yield, here we're at the lower end of our range in terms of our allocation. We've kept some dry powder in the event that we get more of a risk-off trade. And certainly this week with what we've seen in the Treasury market, we have seen high yield spreads widen. So that opportunity could be coming in the next couple of weeks. The fundamentals are quite good in the high yield market, but of course valuations reflect a lot of that right now.
Hey, Janet, we're going to have to leave it there. Thank you so much for joining us this afternoon. That's Janet Reeling, Senior Portfolio Manager and Head of the Plus Fixed Income Team over at Allspring Global Investments.
I want to go back to NVIDIA. We mentioned a red sticky, a headline crossing the Bloomberg that NVIDIA shares extending their drop to 10%, erasing $212 billion in market value alone today. I was just taking a look from when it peaked on March 25th. And to today, we are down just shy of 20%. So you would call that a bear market move, right, in terms of shares of NVIDIA, but we're keeping an eye.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tesla is recalling almost 3,900 Cybertruck pickups to rework or replace accelerator pedals that can dislodge and cause the vehicle to unintentionally accelerate, increasing the risk of a crash. According to a recall report submitted to the National Highway Traffic Safety Administration, the carmaker received notice of 2 customer claims relating to the issue. The company said that when high force is applied to the Cybertruck's accelerator, the pedal may dislodge and be trapped by interior trim. Tesla shares now trading lower ahead of the close, down by 2%. Netflix shares dropped today by 9%. They are tumbling the most in 9 months as a weak forecast for revenue and a warning that the streaming giant will stop reporting subscriber numbers in 2025, overshadowed an otherwise strong start to the year. Netflix right now down by 8.9%. Warner Brothers Discovery CEO David Zaslav is awarded compensation of $49.7 million in 2023, a year when actors and writers went on strike for higher pay, and the media giant initiated steep job cuts. The number was disclosed in a regulatory filing. It is about $10 million greater than his pay in 2022. Warner Brothers Discovery, on a down day for much of the market, higher today by 0.7%. Elsewhere in earnings, American Express shares rallied 6.2% after reporting revenue that topped estimates in the first 3 months of the year as consumers continued to flock to the company's premium credit card offerings. The New York-based credit card giant said revenue jumped 11% to $15.8 billion in the first quarter. That beat the $15.77 billion average estimate. And those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
Thank you so much. It is Bloomberg Business Week.
Sorry, I was looking at the
That's
market.
Carol Massar. I'm Tim Stenevec. I was saying thank you so much, Carol Massar, for not pressing your microphone and turning it on. But
Press the button.
we're off of lows on the S&P 500. Still down 0.9%. The Nasdaq Composite down over 2%, as we just heard from Charlie Pellet.
I think what's interesting is some of the individual names, right? We talk about the Magnificent Seven. We've been talking a lot about NVIDIA, down about 10% as we speak. So it's pretty much at its lows of the session. I did a quick check from March 25th when we saw a high in shares of NVIDIA to today, and we're down roughly almost 20% on that name. So we've seen quite a pullback. You know, you've been looking at decliners. Sun Micro is one of the names. Supermicro. Forgive me. One of the outperformers. They make mainframes. They play big time in the AI
And a recent addition to the S&P 500.
And they're getting smacked down.
They're just getting smacked down. It's down more than 20% as we speak. It's an interesting reason why, Carol. They announced their earnings this morning. That they didn't announce the numbers. They announced that they were going to report earnings later this month. And last time they announced that they were going to report, they actually came out with preliminary results that were way past expectations.
Right.
They didn't do that this morning. They just announced the earnings date. So that has investors concerned.
All right, so a little bit on edge. To be fair, in a market that I think everybody's on edge a little bit, in a higher rate environment, geopolitics continues. But the trend lines that we have seen over the last 3 weeks in terms of the S&P 500 were down, on track for another third week in a row of declines, and we haven't seen that in some time. So you do talk about, all right, a new trend line taking down, what are we, below 5,000. It was just a week or two ago that we were at 5,200, and no, it was actually last Friday, right? We were curious about whether or not we could hold above 5,200. We did going into the weekend. We did not, though, on the other side of the weekend.
Yeah, I think there's a lot at play here. Part of it has to do with geopolitics, of course, as well. But then, of course, the reset sort of from the Federal Reserve, the idea that Jay Powell is now talking about being higher for longer. I mean, one of the most read stories on the Bloomberg today, all about that.
Yeah, and maybe just a reevaluation of artificial intelligence. We just talked about it with the dean of INSEAD, the French Business School. But, you know, they are certainly working in and all in terms of teaching students and trying to figure out the impact. But, you know, investors have been rushing into it for the last year and a quarter. And so maybe there's a little bit of a reset. It's kind of reset week, if you will. Welcome to Reset Week, everybody.
Fortunately, it's almost over.
It's almost over. And over to our TV colleagues. That's because Behind the Bell starts right now.
ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenevik. Alex Steele taking a well-deserved day off. Welcome to our audiences across all of our Bloomberg platforms. A pretty big sell-off going on right now, Carol, in the S&P and the NASDAQ dragged down by big tech.
Yeah, absolutely. Like across the board. I just heard you talking on the TV side of things, Romaine, about NVIDIA and having its worst day in several years. I was looking at NVIDIA from March 25th when we saw that high on that name to today. We are down just shy of 20%. So very much a different rethink, at least in today's trade when it comes to NVIDIA and really over the last couple of weeks here.
Well, earlier in our program, Abigail Doolittle was on.
Sorry,
yes,
just to Carol's point, too, because I was actually looking at that, too. And then you go back to that March, at least with the NASDAQ 100, you go back to that March high, that March 22nd high, and I was going through the numbers here. I mean, we're down like 7% or something from that, which is just insane, given that we're only up like 9%, and I think we might have to recalibrate that given the selling into the close.
I'm calling it the reset week. I really feel like the tone is changing a little bit.
But is this a reset? I mean, you're talking about erasing like almost all the gains for the year. That's worse than a reset.
I mean, Dennis Gartman was on earlier today with Abigail Doolittle, and he said,
Abigail Doolittle.
Yeah, for Options Insight, and he said, the bear market is just beginning. This is a bear market that's been long overdue, he says, and he's bearish right now.
So he sees a bit of a regime change here in the markets, but I mean, let's also not forget that we have a couple of things going on, right? Fears of Middle East retaliation over the weekend. There's no economic data today, and there's a lot of nervousness before the Mag 7 start reporting their earnings next week. So you combine that all together, why be long?
Yeah, well, I mean, well said there. Let's take a look through the numbers here, and we'll start with the green on the screen. That belongs to the Dow Jones Industrial Average, which is higher on the day by about 200 points, or about 0.6% here on the day. It takes a while for these numbers to settle, but one tick up or down is going to be the difference between whether the Dow finishes the week in the green or in the red, basically flat on the week. The S&P 500 definitively down on the week and on the day, a 0.9% drop, a close below 5,000, lower by more than 3% on the week. The NASDAQ composite lower by more than 300 points, 2% on the day, about 5.5% on the week. And let's check in on the Russell 2000. Another down week for the Russell, but a relatively bright day, a gain of 0.2%.
All right, you mentioned the S&P 500. We're down, 3 weeks in a row here, Romaine. So this is the longest streak that we've seen going all the way back to October of 2022. About mid-October. Having said that, if you go into the S&P 500, Scarlett, I know you're going to do the industry groups, you've got still 335 names to the upside, actually gaining ground in today's session, 166 to the downside.
Yeah, and that's a really good point, because you see that reflected in the IMAP as well. It looks like a pretty mixed picture, albeit the biggest sectors are leading the declines, and that is, of course, technology, losing 3.1%. Of course, that's NVIDIA. Communication services losing 2%. That's Netflix, although Paramount has offset a lot of that. Consumer discretionary losing more than 1%. Outperformers include utilities, traditional safe haven, financials, and energy. And of course, energy moving higher as oil prices rise.
All right, let's go to some of the individual gainers. And it just shows investors do react to fundamental news or deal news in the case of Paramount, which is the #1 gainer in the S&P 500, folks. It's up more than 13% in today's session. Apollo Global Management and Sony Group are said to be considering a joint offer for the media company. We know that Paramount, the parent of CBS, MTV, other networks, holding exclusive talks with Skydance Media, also about a deal. So there's a lot going on, but Paramount certainly a standout in today's session. All right, earnings news. Yep, leaving this name. American Express up more than 6%, #2 gainer in the S&P 500. This as Amex reported revenue that topped estimates in the first 3 months of the year. Consumers continuing to flock to the company's premium credit card offerings. The number 3 gainer, in the S&P 500 is Fifth Third. It was up just about 6% in today's session. The lender reported first quarter net interest income that was ahead of consensus, and analysts described its overall report as being solid. And this one, Romaine, is for you. Trupp Media and Technology Group, its shares actually rising for a third day of gains, up another just shy of 10% after about a 26% gain yesterday. Wow. Yeah, we've had a week.
So the rise today, can we also blame that on the short sellers? Or?
Well, there's probably a lot to go around.
Tim, you got some decliners.
Yeah, I do. No shortage of decliners
I wasn't
here.
done, but I will pass the baton
Carol,
to
please.
my beloved colleague.
The NASDAQ 100, look, we just got to say, dropping 2.1%, worst day since October for the NASDAQ 100. I want to start with NVIDIA.
And can I just say, sorry to interrupt again, but on the NASDAQ 100, so I was going through the numbers. We're up 9% to start the quarter. So basically to start the year to that record high. Now the NASDAQ sitting on a 1.2% gain for the year.
So what is it, Romaine? Is it geopolitics? Is it rates moving higher?
Well, I think it was a combination of rates and then the fact that, well, you got this bloom coming off the rose of that AI chip trade.
Well, let's talk about that because NVIDIA shares stumbling 10% today, having their worst day going all the way back to March of 2020. That's when they fell more than 18% in a single day, closing below its 50-day moving average for the first time since November. Not just NVIDIA. Shares of Meta Platforms closing down 4%, Amazon 2.5%, Microsoft falling 1.2%, Apple falling 1.2% as well. I do want to also talk about Super Microcomputer because it did have its biggest decline since August, really dragging on the S&P 500 today and dragging down other AI stocks too, which I just mentioned. Intraday, it was the biggest drop going back to March of 2020. Shares now trading at their lowest level since February 8th. The company,
Can I just say
here's
it's up
why.
151%?
Not yet. You can't say that yet. I'm going to talk about why it went down. Because it announced this morning that earnings are coming out on April 30th. And last time it came out with its earnings date, it pre-announced numbers that exceeded Wall Street estimates. It didn't do that today. So that has investors on edge. Sorry, Carol, how much is it up this year?
151%. I mean, sometimes things go a little far too fast, and so maybe
the pendulum swings too far. Are you saying?
Yeah.
Wait, I'm sorry, Tim. Explain that again. So it's because they didn't move the earnings date?
They didn't. They came out with their earnings date, but they didn't pre-announce better than expected numbers.
Because they did last time,
right?
and people are disappointed it didn't happen again.
Exactly. Yeah.
Okay.
So. Okay. I do want to also just end with honorable mention Netflix. Despite a quarter that did blow past estimates, it beat on subscribers, beat on the top line, beat on the bottom line. Forecast for revenue was a little weak. And then this was the big one. We talked about this yesterday. Not reporting subscriber numbers starting in 2025. So one more metric that's very important to analysts and investors, that is gone for Netflix.
What will options traders do without that subscription number?
Let's take a quick look at what happened in the yield space. Well, it was kind of a subdued day here. We did actually see a drop in yields. Modest buying that came in, or I should say actually a lot of buying came in overnight here as that safety trade really sort of flared up. But then it kind of died down. You're still seeing yields lower on the day, but we should point out the sell-off in treasuries did continue on a weekly basis. Fourth straight week right now. We're up on a weekly basis on the 2-year yield by about 8 basis points and about 10 basis points right now on that 10-year yield. And guys, a lot of people have been talking about this. I mean, you were asking earlier, Tim, whether the sell-off was because of what we're seeing with AI or what we're seeing with some of these other things. But of course, the rate story really fits into that as well here. And a lot of people now looking at that 10-year and a 4.7 threshold that could trigger more selling.
Yeah, absolutely. All right. So kind of interesting. And what we've got a couple of waits before we wait for that next FOMC meeting in terms of maybe even more clarity in terms of what's to come. But a couple of stories, Tim, that caught our attention. It has to do with kind of money and wealthy people?
Yeah, so I love this story by our own Alora Nimus, who talked a little bit about the different way that very wealthy people and people who earn high incomes are, I don't want to say working the system, but making sure that they're not spending too much time in New York and California so they don't get charged income tax on being in those places.
Yeah, because if you're in New York or California too much, then New York treats you as a full-time resident, and then they'll tax you as one. So people are taking off and making sure that they leave New York State at a certain time, and they're watching their hours and their days. There's even an app to help you keep track of this, which is pretty incredible. It's kind of become an obsession because the auditors for each of the states are very, very aggressive in trying to determine whether someone was in New York, even just to stop and get gas or get something to eat, and they'll count that as you were in New York for that day, and therefore for these number of days over the year you were in New York.
Okay, first of all, Tim, you were being way too diplomatic there, and second of all, this story was fascinating because everyone knows this has been the parlor game for a while. Basically, 51% of your time basically needs to be in Florida or whatever low tax haven that you're in, and then the other 49 you can do whatever. But to see just how detailed they are, particularly with these flights and the driving times and the apps and stuff, I guess, look, if this is about saving, several $1 million in taxes, sure, why not?
It's all about where you keep your teddy bear.
It's the teddy bear test.
Yeah.
Exactly.
Or where your dog is in
Peloton.
Yep. Oh, that's right. There was a good example of that one.
Your teddy bear and your pillow.
So
Peloton
you gotta have
moved
a
to
Peloton.
Florida.
There's a question here. So where do you spend most of your time, Tim? I mean, you're California.
At this office.
Oh.
That was a
You
quick
don't get
answer.
taxed more for that, by the way, right?
Yeah, I do.
All right, everybody, that's a wrap. Our cross-platform. Have a great weekend. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see the gang on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
I want to see this segue from the teddy bear test to...
What a week. That's all I can say.
Okay.
All right, here's an example of just what went down this week. Escalating tensions in the Middle East, a reset of the clock when it comes to the Fed cutting rates, the S&P 500's worst week going back months, its longest losing streak going all the way back to October of 2022, the 10-year, Carol, hitting its highest since November. Oh, by the way, earnings are also really getting into gear.
Yeah, that's just some of what's happened this week. It's the backdrop, as we like to remind everybody, what David Weston has to kind of pull together with his guests. He's Bloomberg News anchor, of course, of Bloomberg Wall Street Week. It's coming your way at 6 p.m. Wall Street time on radio and TV. David, you have to, first of all, nice to have you here.
Nice to be here.
Does it feel like it's getting a little bit darker in terms of tone and sentiment, the conversations you're having with guests? Because we're talking about how, certainly on the equity side of things, one metric, but how it feels like things have rolled over a little bit.
Yeah, put aside for a minute geopolitics, which is a big put aside because we've got Richard Haas on talking about that. So just put that big one aside. It seems to me a theme of the week actually is something you referred to earlier with NVIDIA, which is too far, too fast. There are a lot of places where perhaps we went a little too far, too fast. That doesn't mean it's all bad necessarily.
Right.
It just may not have been quite as good as we thought it was. And maybe in the back of our minds we might have thought that just might be possible.
Is one of those places EVs?
It just son of a gun. That might be one of them. That's exactly right.
Okay, the reason I ask is because I've been following, we've been following Tesla for a long time.
Yeah.
And really, a lot of the stock sell-off that has happened recently, but the problems for Tesla started to appear really about a year ago. And it's not just a Tesla problem. This is a wider EV problem.
It's part of a broader problem. By the way, if you've got one of those Tesla trucks, I'd be careful about that accelerator pedal.
Is that crazy?
That doesn't sound very
That's
good
terrifying.
to me. Those trucks. But
a simple fix, David.
Yeah, simple fix.
You just got to get the Tesla to the place to fix it.
Fortunately, I just don't have one. But that is a broader symptom, I think, of what's going on with EVs because there was so much enthusiasm. We're really on the run. And so we have Steve Ratner on to talk about that problem. But we also talked to a woman from J.D. Power who is actually in charge of EVs for J.D. Power about exactly where we are. And this is her analysis with actual data, consumer data about what's going on. This is what she had to say.
Last year, EV year-over-year growth was 50%. Plug-in hybrid year-over-year growth was 36%. But EVs outsold plug-in hybrids 4-1. And the reason is because there are a lot more EVs available than plug-in hybrids. But also, there's a consumer element to this question, and then also the manufacturers. Manufacturers have to balance their portfolio and meet the emission requirements. But from a consumer standpoint, we do collect data from both EV owners and plug-in hybrid owners. And our ownership data tells us that overall consumers are very satisfied with EVs, more so than PHEVs, in almost every category that we measure, and especially in that category of the total cost of ownership. It's much higher satisfaction for EVs. But that said, PHEVs are a great introduction to EVs, and our data shows that 70% of plug-in hybrid owners are very likely to consider stepping up into an EV.
So that's Elizabeth Creer from J.D. Power, as I said, and there are a couple of things in there. One thing is there was a huge step up last year in EVs, and things are leveling off some now, and that's inevitable. Another thing is, she said, if you get an EV, then you really like it. The problem is getting it in the first place and getting over the hump of it. One of the things we talked to her about, we talked to Steve Ratner about, is some of the things that are deterring people. And part of it is uncertainty about cost of buying, because you've got these rebates and you've got tax breaks. Uncertainty about charging.
Right.
You know, where are you going to charge it? Is there going to be a charger when you need one there? And there are a lot of issues around it that make people hesitate. And the biggest one maybe is particularly the largest U.S. automakers decided, and for understandable reasons, to go in at the top end of the market. GM started with Cadillac, really expensive ones. For most people, you can't afford one of those, and we are somewhat behind, particularly U.S. manufacturers, in having the more affordable versions of EVs that they say are coming, and Tesla said was coming, although now it's not quite so sure, right, about when it gets there. But there's a real problem with the price point.
Well, I'm curious if either of them or Steve said, you know, the idea that, okay, the automakers get it and they've really got to get a cheaper price point, that's the way that they're going to get mass adoption, if you will. Is that like the strategy?
That's absolutely right. But as Steve says, and he knows that, you know, he was head of President Obama's auto task force. He took this industry apart, put it back together. He said, it's really hard to make automobiles.
Yeah.
You know, it's easy from the outside to look at it, but actually it's a very difficult thing to do. It's very complex. He said also part he thinks of what's happened is the auto companies felt so scarred before that they were behind in so many ways, of the Japanese automakers, the German automakers, the Korean automakers, that they said, we have to go all in this time. We have to prove to everybody that we can be early adopters. And so they really went all in. And he said, it's understandable. They may have gone a little bit too far too fast.
I was surprised with what Elizabeth Cree had to say about the plug-in hybrids.
Yeah.
And that EVs still outsold these plug-in hybrids, because that's been one area of a bright spot.
We've talked with our team here at Bloomberg
Keith
about
Naughton a lot
hybrids.
about this.
I think that's a base effects issue.
Oh, I see.
I think because you're coming off of a very low base. So you're up 50%, but you were starting from a pretty darn low base with EVs. And one of the things she said, and Steve said as well, is the hybrid may be a little bit of a, forgive this expression, gateway drug. I mean, it's a step in the direction of green if you're not willing to go all the way. But as she said, it's very likely if you go the half step, then the next one will be an EV.
But I talked to friends who have plug-in hybrids, and they're never filling up their car with gas.
I know.
Because I don't have the stats in front of me, but the typical drive somebody makes when they're out for the day is like 30 miles, and that's enough for the battery to be used.
And GM and Mary Barr, I've talked to her about this. They made a very conscious decision that we're not going halfway. We're going all in. Maybe going back a little bit to what Steve said about the auto companies thinking we got to prove we're really progressive here.
Yeah.
But she made a very conscious decision. We're not going halfway. We're going to go all in.
You don't have an EV?
No, it's funny. I just got a new car and I wanted to get an EV, and I couldn't find one that I really.
You just didn't like it.
No, I looked very hard. I felt like I wanted one, and I feel guilty about it. But I just don't think they're there.
You and I talk about the same thing, right? That we keep thinking that's what we want that, but we look and.
Well, let me go back to what I said before. That was a little bit wrong. I found one I really like. It was $140,000.
That's the other thing.
I mean, even if I can afford it, I feel like it's like a sin to spend that much.
You deserve it, okay? I'm going to say that. And then also, I'd like to take a ride in it. You know, apropos to our conversation, we're just getting word that Exxon's market cap tops Tesla's for the first time since January of 2023.
But that's another, maybe related. I don't want to try to overdraw connections here, but we maybe went a little too far too fast with we're all going to go to zero emissions immediately. Rather than, you know, there's a way through this, so we got to have some emissions on the way there, whether it's through natural gas or whether it's through more efficient automobiles or whatever. And I think most people agree we're going to have to get there, but maybe not just flipping a switch and getting there right away. At least that's a hunch I have.
It's a big market turn, if you will.
Yeah.
So, of course. Got to talk about your conversation with Richard Haas. I mean, geopolitics, so much still, of course, going on.
Yeah, of course. It was an interesting week in so many ways, but for me, at least one way, we started the week, if you remember, on Monday morning, we came in thinking the markets were just going to go nuts after the Iranian attack on Israel. And then the market sort of took a look and said, you know what, I think we can get through this, right? And then at the end of the week, we have Israel going back after Iran. And again, right now, I would say, I'm not sure that what we're seeing in the markets right now has a lot to do with geopolitics. Now, I don't know whether that will continue, but we talked to Richard about that. The problem he sees it in the Middle East is it's now not just one problem in Gaza. It's an Israel-Iran problem. It's an Israel-Hezbollah problem up in the north. It's very, very complicated. But Richard would say more important than any of that is the 75 days after the election in the United States. He said that's what American business should be focused on, is making sure we have a stable system that everybody believes in. We can handle the rest of it, but he's more concerned about possible instability coming out of this election. That's what he thinks is the #1 problem.
And I feel like you see some of that in terms of maybe the polling a little bit, of just concerns about the outcome.
Well, just such extreme things being said, and even threats of being done. It's just, and you hope it's just talk, but you have to worry about it a little bit.
Great stuff as always. David Weston, thank you so much. Wall Street Week here on Bloomberg, coming your way at 6 p.m. Wall Street time on radio and television. David, thank you. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. ExxonMobil's market cap has topped Tesla's for the first time since January of 2023. ExxonMobil shares up today by 1.1%. As for Tesla, down for a sixth day, declining today by 1.9%. Turned out to be a mixed Friday, losing week, 3 in a row for the S&P 500 index. This week, the S&P was down by 3%. Today, the S&P declined 44 points, ending the week, heading into the weekend at 49.67, so a close below 5,000, dropping today by 0.9%. Dow Industrials up 211, up 0.6%. NASDAQ down 319 today, a drop there of 2%. 10-year 4.62%, the 2-year 4.98%. Gold today up 0.4%. West Texas Intermediate crude up today by 0.6%. Tough day for a lot of big tech stocks. We'll have more on that coming up in just a moment. But Nvidia down 10%, Microsoft down 1.3%, Amazon down by 2.6%, Meta Platforms, which reports earnings next week, down by 4.1%. Briefly, sources tell Bloomberg Morgan Stanley has hired Andy Lipsky, JP Morgan Chase's vice chair of investment banking. Recapping, a close below 5,000 today for the S&P at 49.67, down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, and that's where we want to stay for just a moment. A sell-off in the world's largest technology companies hitting stocks, with Wall Street traders gearing up for a deluge of results from the industry that has really powered the bull market. We get this.
Yeah, we saw companies like Apple, Microsoft, Alphabet, Amazon, Nvidia, Super Microcomputer, Meta Platforms all drag the NASDAQ 100 and the S&P 500 lower today.
Yeah, very different trend line than we've seen as of late. Bloomberg News Senior Executive Editor for Global Technology, Tom Giles, is with us. He joins us from San Francisco. Tom, it is definitely a different trend. I mean, the S&P overall is down 3 weeks in a row, but to see these magnificent seven names really take it on the chin, NVIDIA and others, how are you looking at kind of what we are seeing in today's session and just kind of the overall thinking and sentiment it feels like in the trade?
There's a lot of drama in what we're seeing in these share declines. It's been a heck of a week when you think about the results that we have been getting from companies like TSMC, ASML, making people question the AI trade, the AI bullish scenario. They just a little bit more caution in the things that they said in terms of their outlooks. That has kind of spread like wildfire through the markets, and it's forcing investors to take a closer look, a second look at this rally, wondering, did we get a little bit out ahead of ourselves? Did we get out over our skis? And the answer for the moment seems to be yes. Remember, week after week after week, we've been seeing these huge gains in these stocks, and there's been this expectation that they're all going to capitalize on the AI revolution. I don't think the AI revolution, I don't think that thesis goes away. I think we need to see more data before we can start talking about just how big this bubble is or was. Next week, we're going to be scrutinizing everything that the executives from these companies say to figure out, is this real? Does it have legs?
Well, okay, so let's talk about a couple of these companies. NVIDIA shares fell 10%, but it's still up year to date. 53% and up more than 200% last year. Super Microcomputer, Tom, fell 23% today, but so far this year, as Carol reminded us, up 150% still so far this year. So I think for a lot of people, the answer, whether or not we're over our skis is certainly yes. I do want to go back to what you said just now, which is the idea of earnings being right around the corner. How much of sort of the next catalyst hinges on what we hear from these tech execs, not just during management calls, but in terms of numbers?
I think people are going to be listening for, are they over-promising? When you talk about AI, it's great to talk about AI. It's great to talk about how much you're spending on AI. Then the question becomes, how are you incorporating into your products? And are your customers, whether it's consumers, whether it's advertisers, whether it's businesses, are they buying your AI story? And are they buying your AI products? And do those products work? And do they change your life? Or as a customer, those are the kinds of narratives that you're going to have to hear from the tech companies, right? It's not about just, I use the metaphor of sprinkling AI fairy dust on otherwise not so great results. People are going to be scrutinizing them all the more. It's not enough just to use those two letters in succession in your earnings call.
Hey, Tom, one last question, because you're right there in San Francisco. So, the heart of our tech community, if you will. And I'm just curious, sentiment, are you feeling any kind of shift in a more kind of somber tone at all? Or is it just a case of, like we've been saying, maybe too far, too fast, like you have said, too far, too fast. Any shift in sentiment among the tech executives that you guys talk to and report out on?
Well, there's certainly jitters in the market. We'll be talking to lots of executives starting next week, or at least hearing from them on their calls. We'll get a lot more insight from there. But remember, profits for some of the biggest tech companies in the S&P 500, that's Apple, Microsoft, Alphabet, Amazon, NVIDIA, the list goes on, the Magnificent Seven, if you will, are on course to surge 38% in the first quarter. That's what we're supposed to be hearing in a few days and in a couple of weeks for some of these players. Now, if those results pan out, if they meet expectations, that shows an industry that's relatively healthy as far as I can tell. Then the question becomes, what's their forecast sounding like? Okay, did you have a great first quarter? That's wonderful. Tell me about the next quarter. Tell me about the rest of the year. That's the sentiment that people are going to want to hear. And any sense of like, that it's not raw, I think there's going to be disappointment.
All right. So appreciate you, Tom, weighing in right now on this Friday. Tom Giles, he's Bloomberg News Senior Executive Editor for Global Technology in San Francisco. As Tom mentioned, more than half of the Magnificent Seven cohort of tech mega caps will be announcing results next week. That includes Microsoft, that includes Alphabet, Meta, and Tesla. So we're going to have a very busy week, and we'll get a better feel, too, when it comes to tone and sentiment. This is Bloomberg.
Stable life in the city or the suburbs, and maybe moving to another country, doing something completely different, like starting a vineyard, starting a winery, making some rosé.
Sounds like it would be a joy.
Well, it's exactly what Stephen Cronk did. He, his wife Jeannie, and their 3 kids left South London and a career in telecommunications, at least for Stephen, during the financial crisis to move to a small village in the heart of Provence, despite not even speaking much French, to make some wine.
Sounds magical, and that's exactly what they've been doing for the last decade plus. Stephen is owner of Maison Mirabeau. It's a winery in Provence that not only produces rosé, but also practices regenerative farming, which is something we've been talking about a lot lately. Stephen joining us right here in our Bloomberg Interactive Brokers studio. So delighted to have you. Thank you for coming in. That switch in career, had you been thinking about it for a long time? How hard was that?
Yes, it was a slow burn. It took a long time to persuade my wife to sell the house, to take the children out of school, and move to the south of France. It actually took 10 years. And I've been talking about it for so long that my friends were getting bored. And I had
just do it or shut up.
Just do it or shut up. And I had this one friend came to see us from Switzerland, and he said, Stephen, you've been talking about this every time I come here. And he said, let's put some dates on the table. So in fact, we used to have a blackboard in our kitchen. And we said, okay, so when are you going to do this? And we sort of worked it back. And in the end, we ended up with a date of May 2006. And he took a photograph of that. And he went back to Switzerland. And in May 2006, he sent me that photograph and said, so where are you living now? And he knew where I was living. And I felt like that guy who was talking about it. So, I went into action. I'd already kind of paid off most of the mortgage by then, because that was the only financing we had.
Yeah.
You're either born into this world or you buy into it. But we didn't have a huge amount of capital. I made enough to do that. So I started doing research. And there's an expression in the wine trade, which is you can make a small fortune in the wine trade if you start with a large fortune.
Yeah, I was going to say.
It's highly capital intensive, and it was always going to be a struggle. And I was trying to work out, okay, so if I buy a vineyard, how do I scale? And then I met a guy in the south of France when I was doing my research, and he said, Stephen, there are 3 V's in the wine business. Viticulture, so growing the grapes. Vinification, turning grapes into wine. And vendre, selling the stuff. And he said, there are many people here who are great at growing grapes and making wine, but the hard bit's actually selling the stuff. Yeah. So why don't you focus on that? So we sort of approach it from the other way around. It's a bit like the champagne model. So oftentimes the champagne brands won't own all the land. They'll work with growers. So this was great because it suddenly opened up a new way of doing things, and particularly in Provence, where the cost of land is expensive. And this is where the megastars come to live. I mean, it's one of the most beautiful parts of the world. It is absolutely beautiful. And so this way we could actually find the growers to work with and kind of reverse engineer it. So we decided to build the brand first. And I went to, I found the growers to work with. I went into Waitrose, which is one of the big stores in the UK, and convinced him that I could make this wine fly for shelves, and that's how it started.
So you basically created the brand, created the market, and then went back to kind of figuring out how you want to be really doing it.
Exactly. So we 5 years ago we bought the vineyard, but we built the brand for the first 10 years.
We're going to continue. We have to do a little bit of news. We're going to come back. We have some wine glasses that were surrounding us, so we're going to sample. But we want to hear a little bit more of the story because I want to hear the backstory now that you've got the brand and so on. We're going to come back with Stephen Krohn. He's founder and CEO of Maison Mirabeau, joining us here in our studio, and we're going to continue this conversation in just a moment.
Hey, just a reminder of how stocks closed this week and today. The Nasdaq falling by more than 2%. The S&P 500 down 0.9%. On the week, Carol, the Nasdaq down 5.5%. The Nasdaq Composite, and the S&P 500 down 3% on the week.
Yeah, and it's really that sell-off in the world's largest tech companies. That has been a change in terms of the tone and where the selling happened. All right, right now, to world and national news, to Amy Morris. She's in D.C. Hey, Amy.
Hey, Carol. The jury's been chosen. Now they've been sent home. 2 court hearings are going on right now. One in front of Judge Juan Merchan. He says he's going to rule in the morning on a prosecutor request to use evidence of prior bad acts by Donald Trump. The other hearing across town where Trump's team is asking for a halt to the trial and a change of venue. We're expecting a ruling on that any minute now. Meanwhile, a man is in critical condition. He set himself on fire outside the courthouse in downtown Manhattan. Police say they found flyers at the scene that referenced a website with the gentleman's manifesto. House lawmakers working all weekend. They're going to hold a series of votes tomorrow on the foreign aid package to Israel, Ukraine, and Taiwan, and a measure that would force TikTok to separate from its Chinese parent company ByteDance. House Speaker Mike Johnson says House votes are expected to begin around 1 o'clock tomorrow afternoon.
We look forward to the vote tomorrow. We look forward to every member voting their conscience and their desire, and that is exactly how this process is supposed to work and how the House is supposed to operate. So we're happy to provide that.
The Senate will be voting next week. As Israel maintained official silence on the retaliatory attack on Iran, its analysts and officials weighed in on whether the scale of the assault was a sign of strength or weakness. Secretary of State Antony Blinken at the G7 summit said the group of nations is urging de-escalation.
You'll see soon in the G7 statement a commitment to hold Iran to account for its destabilizing activities, holding it to account by degrading its missile and drone capabilities.
Iran says there was minimal damage and they're not inclined to launch a counterstrike. And we're just learning now, former President Donald Trump has lost his appeal to stop the current hush money trial and move it out of New York City. That's one of the hearings that's going on right now. The judge has just ruled against him, so the trial will move on as scheduled. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morrison. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. It was a down Friday with the S&P 500 index heading into the weekend below 5,000. S&P ended today's session a losing week, I might add, 3 in a row. The S&P now at 49.67 for today. That was a drop of just about 9/10%. Dow Industrials up 211, a gain there of 0.6%, while NASDAQ today did have a down day as well. The NASDAQ Composite Index fell today. We had NASDAQ down by just about 2%. 10-year, 4.62%, with a 2-year, 4.98%. Spot gold advanced by $10 the ounce today. Gold now at $28.39 for gold. That was a gain of 0.4%. West Texas Intermediate crude up 0.7%, 83.34 a barrel. Also today we saw shares of both Supermicro and NVIDIA slump as AI winners led today's tech sell-off. Today we had shares of NVIDIA lower by 10%. Supermicro was trading lower today, plunging 23%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to Stephen Cronk, owner of Maison Mirabeau. It is a winery in Provence. As we said, produces rosé. It also practices regenerative farming, which is kind of where I want to go back to. Stephen, talk to us about, you said you kind of worked a little bit backwards, developed the brand, developed the market for what you guys do, and then kind of went backwards. Regenerative farming, did you know you always wanted to do that? And how easy was that to do in making wine?
No, I didn't know I was going to do it. When we bought the vineyard, I actually looked at 39 vineyards before we found the right one. I mean, it's inland from Saint-Tropez. It's surrounded by nature reserve. It's the most stunning parcel of land. But it had been farmed conventionally for 20 plus years. And when I say conventionally, I mean they spray it with everything. Yeah. And so the soil organic matter was nearly dead.
I was going to say, wasn't it worn out?
Yeah, it was worn out, completely depleted. And I knew I wanted to farm organically, but organic farming doesn't give you a pathway to rebuild. It just gives you a checklist of what you can't do.
Right.
So you can't spray any synthetic fertilizers and herbicides. But a friend of mine sent me an article written by Eric Asimov of the New York Times.
A wine guy, we could say.
A wine guy, a very good wine guy.
Son of a science fiction guy, but a wine guy.
Yeah, exactly. And he'd written an article about this lady in Oregon called Mimi Castile. And she was farming regeneratively, and I'd seen in the article pictures of goats and chickens and sheep running around the vineyard, completely overgrown. And I thought, I want some of that. And the article talked about the fact that soil can rebuild, and so, yeah, I reached out to her.
Does it make a big difference for the grapes? The taste, and then, of course, the wine?
It does. But actually, when I realized that wine schools weren't teaching this, I formed a non-profit 3 years ago and brought Mimi in as a trustee and a permaculturist. And now we have 8 different trustees supporting it. And we want to prove the science that actually it does work and it tastes better. And actually, it seems to be that input costs drop as well because you're not plowing or spraying. You're working with nature rather than against it. You're working in a polyculture rather than a monoculture. Right. So if input costs can drop, yields can be stable, but quality can increase. It's like, what's not to like? So we're on a mission to sort of convert the world to farming regeneratively, to lose the mindset of monoculture.
We brought some wines, and I want to try a little bit, and you can walk us through it. But this whole idea of using animals, right, to kind of like rework the soil, and they're eating, they're doing their duty, if you will, but it's all working into the soil. It's kind of wild, right, but so natural.
Yeah.
Am I being too base?
No.
Is that the definition of regenerative farming?
Yeah. I was trying to figure out.
Yeah, but that's exactly what it is. Right? It is wild and it's natural.
That's why the animals are running around, right?
Yeah, exactly. That's exactly it. You're trying to basically duplicate what happens in nature in the vineyard in a way that still works for the vines.
I love it.
So it makes perfect sense.
All right, tell us. We've got 3 wines here, and tell us.
So the first one is we call Mirabeau Pure, which is our flagship wine. So this one, if we're getting a fancy account, we'll always try and get it in there. So I would say it's a classic Provence rosé.
Yeah.
One of the great things about Provence rosé is it's always dry. Mm-hmm. And that's one reason why people always go to Provence for their rosé wines. And it's also the only wine region in the world that focuses itself on rosé. So it's 91% of production is now rosé wine. So this is super refreshing.
90% of the world's production?
No, 91% of the production from Provence is rosé.
Okay.
So it's only a few percent of red and white. So there's no other wine region in the world like that. So we really are the experts in Provence. And these wines are so versatile. So you could imagine sipping this by the pool without any food, but also it goes so well with so
It's
many
not
different
just
food
because it's
types.
Friday and it's been a week, but this is lovely.
Thank you.
Very good.
No, it's gorgeous.
How much does a bottle of this retail for?
This is about $25.
Okay. It's great.
Well, that's interesting because we spend so much time talking about price point. I mean, that's a great price
It is a
point.
great
And it's
price
interesting, I feel like there's been this new reality in wine that you don't necessarily have to spend a ton of money.
Yeah, no, there's no, I mean, I think wine at lower price points is getting much better quality than it was.
Is that a way of also getting to the younger generation that we continually talk about that say that they're not interested in wine anymore?
Or even not
Does it
interested in
help?
alcohol.
Or
That's
alcohol.
that's an issue these days.
I know. My kids
Like,
aren't like that,
what's
but
wrong with
they're...
Just kidding. I'm
No.
just kidding.
I think it's funny. I was listening to an article recently about cocktails, and because cocktails are really on trend. I think during the pandemic, people got used to that, and the cocktails made in front of you in a bar, and you feel really special because wine by the glass is often the same price as a cocktail.
Yeah.
And it's poured out of the bottle because all the work's happened at the other end.
That's
of
right.
the supply chain.
All right, so talk to us about the second one.
The second wine, okay, now if you put your nose into that, it smells a little bit different. And that's because it's actually been oak aged.
Oh, yeah.
So this is,
It is different.
It is
Yeah.
different. It's a very different style as well.
I'm not a big rosé person, but it's nice. I love it. I love the...
Exactly. Well, actually, in fact, if you close your eyes, you probably think this is a fancy white Burgundy. It's really, really stylish. This is from our estate, so this is regeneratively farmed and it's organic, but it's had 6 months in oak barrels. So it gives a very...
That's good. That's a really good one.
I always love the talk about the barrels. We've gotten kind of an education over the years about the importance of them and the difference, and it does make... It's a factor in all of this.
And what's this one called?
This is called La Reserve by Domaine Mirabeau.
Tim's taking notes.
Yes. So it's because we called it La Reserve because it's in a nature reserve, and this is our regen wine. We're certifying regen, and this is something that's very interesting. So if you want to put organic on the label, you have to be certified organic.
Right, I understand.
But now regenerative is becoming more and more popular, so people want to certify regenerative.
This is what we talked about with the folks at Common Ground, when we talked about this movie kind of off air, this documentary, but this idea of I'm like, well, so how do I know when I'm buying something? And they're saying that there's a marks, there's a demarcation, if you will, or notification on if you buy some kind of produce or something that's bought that way. And so you guys are doing the same thing.
Yeah, we're doing that, and I think more and more growers will do, because the supermarkets want to know if it's properly farmed regeneratively if they're going to talk about it. But actually, that's really, I think the supermarkets are going to get behind regen now. You're going to see in the UK, some of the big supermarkets are really starting to talk about it.
I'm going to say it feels a little bit like super dating. Not that I've ever done this, or speed dating, but it's it's speed drinking a little bit, but you're so kind walking us through it. So, Stephen, we have one more because we want to get to this last one.
This is not a wine.
Before you take
This
a big
is
sip
not
of
a
it,
wine. I smelled it.
So this is Mirabeau Riviera Gin.
Don't chug it, Carol.
I'm not a chugger anyway. Don't you know me?
Yeah, I do.
Okay, so this is a gin.
It's a gin made from upcycled grape skins.
But is that what gin is usually made of?
No,
Skins?
Gin is usually made from wheat or corn. So this is a grain base.
That is interesting.
And this is super smooth. So being made of grapes, it gives it a roundness on the palate.
Right.
That's 43% alcohol by volume. Yet it's so smooth. We keep a bottle in the freezer just to chuck into a martini when we fancy it.
I need to keep just a bottle in the freezer. No, it's
Do you have a
interesting.
freezer under your desk that we could use?
So, do you plan to expand out the line more?
Well,
this seems like a lot.
Yeah, no, it's a lot. I keep saying no more MPD, but then the
What's
market,
MPD?
new product
Oh,
development.
okay,
Sorry.
okay.
But then the market's changed. The young people who have going no and low alc is the big growth category.
This one is normally no alcohol.
Yeah, I mean, I'll take a sip of wine or two,
But
but
not
it's like
really.
as I've gotten older. I mean, I think a lot of my friends have done this. We just drink a lot less.
Yeah. And
it's a
normal.
challenge, I think, for the industry.
It is. The young aren't drinking as much. The older people are taking more care of their health. The WHO came out last year and said there's no safe amount of alcohol. It's like, oh my gosh, guys, come on.
They're just wrong.
Yeah. You know what they need? They need a drink.
They need a drink. No, but it's interesting. Are you limited, though? We've only got about 30 seconds left. Are you limited by your land size of how much variety you can do, or no?
No, because we're working with so many growers from around the region. So our wine estate represents a small part of what we do. So no, we can scale this business.
All right, Stephen, I'm just going to say it. You're kind of one of our favorite kind of guests. So you can come back anytime. No, but this has been really fun. And if we find our way in Provence, I'm going to come knock on your door.
You must do that.
Okay, just warn the
Let's
wife.
do a remote. We'll do a remote from there.
That
Sounds
would be
great.
really lovely. Stephen, thank you.
Thank you
So
very much.
appreciate it. Stephen Krong, founder and CEO of Maison Mirabeau, joining us here in studio. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Super microcomputer shares had their biggest drop in about 2 months today after the maker of servers announced the date of its third quarter results, but did not pre-announce results. Shares today down 23%. The stock is also trading at its lowest since February. Shares of the company, a favorite play on artificial intelligence, have lost a third of their value since a March peak, but they do remain up roughly 180% on the year. American Express reported revenue that topped estimates in the first 3 months of the year. And with that story, here's Bloomberg's Dan Schwartzman.
Charlie, consumers continue to flock to the company's premium credit card offerings. The New York-based credit card giant said revenue jumped 11% to $15.8 billion in the first quarter. That beat the $15.77 billion average of analyst estimates compiled by Bloomberg. Spending on the firm's cards jumped 6% to $367 billion, which was slightly higher than the $366 billion analysts in the Bloomberg survey were calling for. That led to profits of $2.44 billion in the quarter, which also topped estimates. Amex, known for products like its $695 a year platinum card, announced during the quarter that it would revamp its credit cards with Delta Airlines, the firm's largest co-brand partner. The added perks come with higher annual fees. Charlie?
And that's Stan Schwartzman reporting. American Express again today up by 6.2%. Netflix tumbled today as a weak forecast for revenue and a warning that the streaming giant will stop reporting subscriber numbers in 2025, overshadowed an otherwise strong start to the year. Today we saw shares of Netflix dropping by 9.1%. Netflix heading into the weekend at 555.04. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. A jury was seated. They were sent home, and now the hearings. Donald Trump's defense team arguing for a change of venue. The judge ruled against that about 20 minutes ago. The judge also again denied Donald Trump's claim that he has presidential immunity. And the prosecution asked for permission to use, quote, evidence of prior bad acts by Trump. The judge says he'll decide on that in the morning. The court has adjourned for the day. They'll reconvene on Monday. And Monday will, by the way, be a shortened day for Passover. Meanwhile, a man remains in critical condition. He set himself on fire outside the courthouse in downtown Manhattan. Police say flyers found at the scene referenced a website with his manifesto. House lawmakers are scheduled to return to work tomorrow on a Saturday to take up a foreign aid package, including funding for Israel, Ukraine, and Taiwan, and a provision that would force TikTok to divest from its Chinese parent company. And as that inches ahead on Capitol Hill, NATO is pledging to help plug holes in Ukraine's air defenses. That part of the story now from Bloomberg's Nathan Hager in Washington.
NATO Secretary General Jens Stoltenberg met virtually today with Ukrainian President Volodymyr Zelensky. Afterward, he said allies have identified additional air defenses for Ukraine, including Patriot and SAMP-T systems. Stoltenberg didn't provide specifics on which countries would provide them or how many systems would be coming in, but he said allies that don't have the weapons have promised funding, and they're also working to send spare parts for systems that are already in Ukraine. In Washington, I'm Nathan Hager, Bloomberg Radio.
And a double whammy from Taylor Swift. Her new album, The Tortured Poets Department, dropped at midnight. Amazon says it is the most streamed album in its first day ever on Amazon Music. But that's not all. Swift also dropped a double album a couple of hours later, The Tortured Poets Department, the Anthology. That has 15 additional songs. Double album from Tay-Tay. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business.
Have you listened to it yet? Amy, have you listened to it?
Have you listened?
I've been listening to it.
What do you think? Yes. What do you think of it? I listened to it.
It's one of her most mature albums, I think.
Okay.
It's tortured.
It's really,
What's
really
tortured?
beautiful.
You know,
listened to it already?
I love Taylor. I love folklore.
What's tortured?
No, it's funny. It's just like, it's a lot of angst. It's a lot of angst. It's like, you know,
what else is there?
My
in
daughter's
life,
a fan,
Carol?
and like I kind of make fun of sometimes Taylor. Like it's like I went to the refrigerator, got some milk. You know, like it's just funny. Some of her songs are kind of, I don't know. We'll see. I don't know. It's kind of interesting to have that drop, and then you have Beyonce dropping.
I'll tell you, I had physical therapy this morning, and at very early.
Yeah.
And
were they playing?
Yeah, my physical therapist was playing it, and she was like, "Just so you know, we're going to play the whole album during your session."
Did you
today.
listen and like it?
Yeah, it was
Amy,
good. It was good.
Did we lose Amy?
We might have lost Amy.
Yeah.
It was good. It was very different than I don't know all her music, to be fair, but it seems different from what I've heard in the past.
I like a lot of her music. I just I was just the same thing when Beyonce's
Amy's
album
still
dropped.
here. We can hear Amy.
Oh,
can we hear Amy?
Amy, are you still there? I don't know.
You need me.
Oh. Did you like it, or do you feel like it's like every song kind of felt the same?
Who, me?
Yeah.
Yeah. I mean, I only heard a couple of songs because, you know, working, but the ones that I heard are different from what she's done before. They're a little moody and angsty, like you say. They're a little haunting. Yeah. I like it. I mean, I don't have any Taylor Swift on my iPod, or what do they call them now? iPhone? What do the kids call it?
Yeah.
So I don't have any of that on my phone, but I liked it.
Right.
It was lovely.
All right. Well, something for everybody to do over the weekend. Amy, you be well. Have a good one. Speaking of the weekend, check out our weekend broadcast at Saturday, 8 a.m. Eastern Wall Street time on Bloomberg Radio, and of course you can find it on our podcast feed. Shout out to the most amazing team in broadcast: Meredith Frank, Juan Torres, Sarah Livesey, Sebastian Escobar, Elizabeth Cedrin, Justin Milliner, Colin Tipton, Anthony Mancini, and there's that guy, you know, who kind of gets us going in the morning. What's his name? Oh yeah, Paul Brennan. Thank you.
He's smiling. He's so
much.
happy.
He gave us a wine.
It's Friday,
It
he
is
says.
Friday. We're all smiling. Thank you, team. We couldn't do it without you. And Taylor, I do love you. Maybe I have to listen to the album a little bit more.
It might grow on you.
It might grow on you. Have a good and safe weekend from Tim and me. Take care, everybody. Check out our weekend broadcast and podcast. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Wines.
The $95 billion foreign aid package with money for Ukraine and Israel is on track to pass the House this weekend, as Democrats provide the votes to pass an important procedural hurdle today.
The yeas are 316, the nays are 94. The resolution is adopted. Without objection, a motion to reconsider is laid on the table.
Democrats may need to help save Speaker Mike Johnson as well, with another Republican signing on to a motion to vacate. We'll have more with Democratic Congressman Ami Bera of California.
The progress on aid for U.S. allies coming against the backdrop of a retaliatory but limited Israeli attack on Iran. We'll get reaction from former National Security Council official Michael Allen.
And the full panel of jurors and alternates selected today in Donald Trump's New York hush money trial, setting the stage for opening statements as soon as next week. Our political panel will be with us today to assess the implications for his campaign, and Kaylee to assess what happened today on Capitol Hill. Pretty remarkable to see these spending bills, Ukraine, Israel, Taiwan, which have been on ice for months, actually clear a rules vote to set up real action potentially tomorrow. Looks like these are going to pass.
Yeah, that is the expectation. Of course, we'll see 4 votes in succession when the votes do indeed kick off. But you're right, Joe. It's probably going to require a lot of Democrats to get things over the finish line, as it did today, just to get this procedural vote through. We heard from the House Speaker, Mike Johnson, on this, basically saying, guys, this is the best I can do under these circumstances.
It's not the legislation that we would write if Republicans were in charge of both the House, the Senate, and the White House. This is the best possible product that we can get under these circumstances to take care of these really important obligations.
We're joined now by Kate Ackley of Bloomberg Government, who's been watching this for months along with the rest of us. Kate, it's great to have you. 316 to 94 was the vote for this rule, which gives us a sense of what the real vote on the underlying bill might look like. 165 Democrats were required to reach that level, more Democrats than Republicans. Is this a problem for Mike Johnson or not?
Well, we're seeing bipartisanship, right? We haven't we've gone
in Washington.
these long stretches, and now we're seeing some real bipartisan cooperation on this. But you know, you were asking about what happens to Speaker Johnson, and I think we've been asking that question ever since he got put in that, ever since he got his gavel. Sure. And I think the best way to look at it is he's somebody who is literally living on the edge, right? He's going, you know, day by day, maybe hour by hour. We'll see more what might happen over the weekend.
So he doesn't know the answer to this.
Will Democrats rescue him? I don't know if he knows. You know, he certainly, Republicans, I talked to some Republican fundraisers this week and said, you know, is Johnson going to have trouble raising money with this threat hanging over him if he does survive? Mm-hmm. And they said, well, he's probably okay if he stays in this chair until the elections. But if somebody comes in next, it's just going to be a free-for-all. And how does a party sort of get itself, the Republican Party, how does it sort of get itself together and make a pitch for keeping control of the House in the November elections?
Well, certainly when it really right now is just a small number of House Republicans who seem interested in kicking Johnson out of the job. Certainly the House Intelligence Committee Chair, Mike Turner, doesn't seem to want that to happen. We talked to him yesterday about the fate of Speaker Johnson, and this is what he told us.
Speaker Johnson is being incredibly courageous, and you've heard him, and as you were reporting, he is saying he's doing the right thing, and certainly he should be rewarded for doing the right thing. Bringing this bill to the floor so that we can pass this on to the Senate and send it to the President's desk is essential for our national security.
Kate, obviously, Marjorie Taylor Greene might disagree about what the right thing is. In this instance, she does seem to think the Speaker is doing all of the wrong things. Can you just remind us procedurally what will happen if she decides, after the Ukraine aid vote, for example, to act on the motion to vacate? How soon could we actually be dealing with members having to cast votes to decide Johnson's fate?
Well, it could be soon. First of all, Johnson could decide to bring it up to, a vote to table the motion, in which case that's where we could see Democrats, which they didn't do for Kevin McCarthy when he was Speaker. They did not vote to table the motion, which essentially ignores it. So that would be the first thing. And if enough Democrats and Republicans vote to table that motion, then it goes away for right then. And then, if they don't, then it sets in motion the same thing that we saw with Kevin McCarthy back in October, where he ultimately lost his job.
It's also worth noting it would stop all business on the floor, right? So everything we're talking about here, Ukraine, Israel, Taiwan, would go on hold again while they had to manage that over the course of 2 legislative days, right? We've got 3 Republicans on this now, and we still don't know if they're going to make this a privileged resolution.
We'll be watching tomorrow.
Yeah, now you've got Paul Gosar, to your point,
That's
Joe,
right.
alongside Tom Massey and Marjorie Taylor Greene, who, of course, already had made this threat. Kate Ackley of Bloomberg Government, thank you so much, as always, for your wonderful coverage of Congress. Now we want to turn to our other top story, Israel's apparent strike inside Iran overnight. Secretary of State Antony Blinken did not directly confirm that attack while speaking today at the G7 foreign ministers meeting in Italy, but he did have this to say.
The United States has not been involved in any offensive operations. What we're focused on is our work to de-escalate tensions, to de-escalate from any potential conflict. You saw Israel on the receiving end of an unprecedented attack, but our focus has been on, of course, making sure that Israel can effectively defend itself, but also de-escalating tensions, avoiding conflict, and that remains our focus.
Let's go now to Bloomberg's Greg White. So, Greg, as we hear the Secretary of State talking about de-escalating tensions, is it the prevailing thinking now in Washington that actually this strike was more de-escalatory than escalatory, because Israel could have gone a lot further than it did?
Absolutely. So far, when you look at the situation, if you think back to a week ago, we were anticipating Iran's retaliation on Israel, and there was great fear that this was going to be a new spiral of direct strikes from Iran on Israel, something we'd never seen before in the decades of the shadow war between these countries. Yeah. And through a series of dangerous but seemingly choreographed actions, things have so far at least managed to be contained. So you had the Israeli strike the Iranian strike over the weekend, which Israel and its allies were able to largely neutralize, and then this strike that Israel hasn't claimed responsibility for, but seems pretty clear where it came from, doesn't seem to have done too much damage inside Iran, but sent the message that, well, if you're going to fire at us from your territory, we have the ability to do that to you. So I think the question, there's very cautious hope here that at least this episode has been contained.
They also proved a point, though, didn't they? Without causing much damage, that they could strike deep inside Iran, in this case an area that is home to Iran's nuclear facilities and a couple of military bases, without being intercepted the way Iran was when it attacked Israel. Did it say more with what it did here than it might have with a more pronounced strike?
Well, certainly, I think the Israelis wanted to send a signal with this that as you say, that they could evade the defenses, and that if they really wanted to strike, they could do something substantially bigger. Similarly, Iran was trying to send a message too that we're not deterred by this. We're ready to take these risks. So there's no guarantee that the next time this kind of thing happens, it will be as easily contained. Right. It's certainly been a very stressful week of diplomacy on all sides to try to keep this as limited as it was in the circumstances.
Well, we spent all week waiting for the strike. Now we know at least this stage looks like, I guess, Kelly, there's a chance that this could be it for now, but we'll, of course, let our listeners and viewers know Bloomberg's Greg White, we thank you for your coverage on an important story. Coming up, California Democratic Congressman Ami Bera will be joining us to talk about all the issues that we've been discussing. That's next on Balance of Power on Bloomberg TV and Radio.
The reality here is that if the House did not do this better policy and process, allowing for amendments on the floor in the process tomorrow, we would have had to eat the Senate supplemental bill. And that is because we were very close, given the timeline in both Israel and Ukraine, to a discharge petition being brought. That would have happened imminently on the Senate supplemental.
Speaker Mike Johnson earlier today after the House advanced the aid package for Israel, Ukraine, and Taiwan, setting up an expected weekend vote. The Speaker relying, of course, on Democratic assistance to move it forward. More Democrats voting yes for the rule today than Republicans. And Democratic Congressman Ami Bera joins us now, the congressman from California. It's good to see you, sir. Welcome back to Bloomberg. It strikes me what happened in the Rules Committee last night and on the floor today with the actual vote on the rule to advance this legislation is significant. Is this the start of a coalition government in the House?
Yeah, I certainly hope so. I mean, you hear from constituents all the time that they want more bipartisanship. They want folks to work together. And you just saw the majority of the House, Democrats and Republicans, come together to pass something that is fundamentally important to global security. So advancing this rule with Democratic and Republican votes shouldn't be the anomaly. Maybe that should be the norm.
Well, there also is the question, sir, of whether or not everyone would like to see this become the norm. Certainly, there are members of the Republican conference who aren't in agreement that Mike Johnson should be working in a bipartisan manner with Democrats, including Marjorie Taylor Greene, Tom Massey, and Paul Gosar can be added to that list. And it raises the